unenforceable. Now, he says the Italian government has also failed to explain how it works. O'Leary said the airline would consider thinning out its domestic flight offering in Italy should the government hold on to the price cap and instead offer more international flights into Sardinia and Sicily. Then the other thing we're watching out for is Bitcoin briefly dropping below $25,000 for the first time in 3 months. There's speculation that FTX could begin sales of digital assets through its bankruptcy process, weighed on other cryptocurrencies. Now, the largest digital currency slumped as much as 3.3% yesterday. And then U.S. cable company Charter Communications is set to offer Disney's flagship streaming service at no additional cost to its subscribers. Now, America's second largest cable provider will include Disney Plus in a $60 a month Spectrum TV Select offering. Sources say Charter will pay Disney a wholesale price for the service. Now, pound actually extending some of the gains after we had the labour market data providing respite for Bank of England policymakers, but it does signal some relief for Britons who saw the real wage growth in 16 months. So Britain's red-hot labour market is showing signs of cooling as unemployment hit the highest level since 2021. The number in work declined and private sector wage growth also eased. Coming up, but we're joined by Ralph Schlossstein. He's chairman emeritus of Evercore. As chief economist, and major banks see the U.S. dodging a recession. We'll discuss that and much more. This is Bloomberg.
It seems more and more high-stakes decisions are ending up in my hands. While still at the challenge, I worry some decisions might not get the attention they deserve. Working with Aon means I've got their whole team in my corner, with advanced analytics and expert insights that put things in the right context. It's the gut check I need to stay on top of it all. Better decisions. Aon.
ARM's IPO book is set to close a day early in what looks likely to be the year's biggest listing. Tech Tuesday, Tesla drives gains on Wall Street after an analyst call. Apple set to launch a new iPhone. Plus, UK wage growth remains at a record high, putting more pressure on the Bank of England to raise rates again. Well, good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London. Now, the Federal Reserve is done raising interest rates and will likely cut them in 2024. That's the view of chief economists at some of America's largest banks. While the U.S. might dodge a recession, economic growth looks set to slow over the coming quarters. Well, Ralph Schlossstein, a chairman emeritus of Evercore, joins us now. Ralph, it's so good to speak to you. We've been trying to set up this interview for quite some time because I want to understand from your perspective what is going on in a lot of the companies. Interest rates have gone up quite significantly.
Right.
Can the U.S. really dodge a recession?
We can. I don't think it's a certainty because what we really don't know is what will be the effect going forward on the real economy of the large increases in interest rates we've had already. Whether the Fed raises again another 25 basis points, I think, is really not a big deal one way or the other for the economy. The real question is what will be the effect over the next 6 to 12 months of the 500 basis points of raising that we've already had.
Why is it taking so long? So usually it translates, what, like 12, 18 months down the line?
Yeah, but if you think about it, we started raising last August, September, July. So we're really in the early part of that 12 to 18 month period of time. And the larger increases have really occurred 6 to 9 months ago. So, you know, there's another big factor affecting monetary policy and interest rates and their effect on the economy is that we had this massive stimulus in response to COVID, and that's been rolling through the economy and it's still being spent. So that's probably mitigated somewhat the impact of the Fed tightening.
So is there a risk that the Fed actually over-tightens and then have to quickly reverse and cut?
I don't. I think the risks now are pretty symmetric. I've been saying for the last 15 months that the risks of overshooting were much higher than the risks of undershooting. And the reason I said that is that the Fed was legitimately and appropriately spooked by the fact that they had overused the word transitory 15 months ago. And so they kind of lost their bona fides in fighting inflation. So that's a terrible thing for a central bank. So they had to do everything possible to convince the markets and participants in the economy that they were serious about fighting inflation. I think we're now seeing real progress on fighting inflation. Inflation is coming down. Labor markets are weakening a little bit. So now I think the risks of over-tightening and under-tightening are asymmetric.
But inflation is coming down, and it wasn't only the Fed, right? The ECB was also saying the same, that it was transitory. Is there a risk that actually inflation's coming down on its own, and so coupled with those interest rate rises, we're going to see, if not a recession, certainly a lot of companies go bust?
I don't know about companies going bust. Well, there's a fair amount of leverage, and rates have gone up a lot. So highly levered companies clearly are vulnerable. Going bust, what normally happens is they restructure, they reduce their debt, the equity holders sacrifice. So I don't think we're going to see anything approaching what happened in 2008. I'm not worried about that. Could we have a mild recession? I think the chances of that are 50-50, 60-40 maybe against. I'm not as positive as other observers of the markets that we're going to escape recession.
Ralph, when you look at also the unwinding of QT, like what's most perplexing actually in all of this? I don't know whether it's market behavior or it just feels like we're not sure where we are in the cycle, and we're not really sure what the economy looks like. I think we've gone from like soft landing to hard landing to no landing to soft landing.
Yes. Well, this is, I've said this before, the most uncertain period of time about the economy that I can remember in my 40-plus years in finance. Not the most scary. No. 2008 was scary. COVID was scary. I don't think we're going to have any kind of a catastrophic event. But, when does the Fed stop tightening? Where do they stop? What effect does that have on the economy? Do we have a recession? There's a phenomenon that I've seen, which I've never seen before. When I meet with CEOs of companies, every one of them says, my company's doing great, but the economy's not doing that well, and so-and-so's company over there isn't really doing that well. I've never seen that. And that's indicative of a high level of uncertainty. Now, with respect to quantitative tightening, so far we've seen a pretty material shrinkage of the Fed balance sheet, and longer rates have gone up, but not in a uneven or scary way. I do worry at some point with the Fed coming out of the market as a buyer, and the dollar at some point weakening, that it becomes a little bit harder to finance the very large deficits that we have, and if that happens, long rates will go up.
So it's interesting what you say about chief executives. What does that mean they do with investment? So at the moment, they're still hiring. We're certainly not letting anyone go. Yeah,
they're hiring and they're investing in their own business. The implication, I think, is that the business of Evercore, mergers and acquisitions, has been slow over the first 6 months. There's lots of things that almost every CEO wants to do strategically. I would say today they're more actively discussing those things than they were 6 months ago, when there was more a deer in the headlights view about the economy. But we're still not at the point where people are prepared to take big actions on the scale that they did in 2021.
So does that mean underinvestment, or does it mean?
I think we're still seeing pretty significant investment in people's own businesses. And employment is still growing. And I think there is a phenomenon because of the recent challenges in hiring people, the inequality between job openings and people looking for jobs. Companies are clinging a little bit more cautiously to their employees, particularly their high quality ones, than they might in another uncertain economic period.
Ralph, you look at, I mean, M&A is a funny thing because you do it in good times and bad times.
Yes.
You probably do it for the good reasons or the right reasons in good times because you want to grow and get better
Yes.
and get into new market share. You do it, I don't know if it's desperation or to help someone out in bad times. Is there a danger that we'll have a pickup in M&A activity for the wrong reasons?
I don't think so. I think the days of CEOs doing transactions to mask problems in their own business are pretty much behind us. The performance of those transactions has been so bad from a stock point of view that both CEOs and corporate boards are a lot more cautious about transformational transactions. And then, of course, you have the regulatory oversight as well, which the whole antitrust is a little bit more aggressive than it was historically as well.
And do you think when there is a pickup in deals, is it mainly domestic or are there also going to be cross-border?
Well, I think the whole world is becoming a little bit more onshoring, nearshoring. So the transactions that were designed to dramatically expand a company geographically probably are going to be a smaller share of activity over the next few years than they have been over the last decade.
Ralph Schlosstein, thank you so much for joining us. That was the Chairman Emeritus of Evercore. Now coming up, Morocco says it needs to rebuild at least 30,000 homes and hundreds of schools, hospitals, and other infrastructure after its deadly quake. We'll discuss that just ahead, and this is Bloomberg.
Today is looking deeper at our ESG plans, then putting out a supply chain fire, then getting a last-minute briefing on cybersecurity. My priorities don't just shift, they shift by the hour. That's where I need Aon. Their combination of advanced analytics and expert insight keeps me up to speed and ready for my next move. Better decisions. Aon.
Now, Morocco's Prime Minister has pledged to help survivors of the earthquake that has killed more than 2,700 people. For more on this, we're joined by Bloomberg's Abir Abu Ammar in Dubai. Abir, so talk us through this aid, as well as the IMF and World Bank meetings next month.
Good morning, Francine. So yes, the Prime Minister came out and said that Morocco will need to build over 30,000 houses as houses in villages close to Marrakesh have been completely destroyed. This aid also includes 500 schools, hospitals, roads, and multiple other infrastructure. The death toll, unfortunately, has surpassed 2,800 people, with thousands more that are critically injured. The Prime Minister's pledge comes as rescue teams, including from overseas. We know that Morocco has sought help from at least 4 countries, including the UAE, Qatar, UK, and Spain. So they want to reach those remote areas where anger has really been brewing over the government's, well, not lack of action, but the action hasn't been as momentous as people have been expected. And then as for the IMF meetings that are supposed to take place in the mid of October next month, we know from sources on the ground, our reporter on the ground who's interviewing people and talking to people, quoted one of the Moroccan officials who said that the show will go on. Those IMF meetings are still set to happen, and the decision on whether to go forward with this event is really up to the Moroccan government's hands. We know that the IMF and the World Bank have stuck to their statements and told us, listen, our sole focus right now is on the people. No further statements have been given. And, you know, this wouldn't be the first time that the IMF holds meetings amid a catastrophe. We know that in 2018 in Bali, after the tsunami that killed over 4,000 people, the IMF continued with the annual meetings with then Director Christine Lagarde touring the site of the destruction.
Abir, thank you so much for the update. Abir Abu Omar in Dubai. Now, North Korean leader Kim Jong-un has arrived in Russia on his luxury armored train for a rare summit with the Russian President Vladimir Putin. The U.S. believes the talks will focus on supplying weapons for Moscow's war on Ukraine. Now, for more on all of this, we're joined by Bloomberg's Sang-Min Cha. So, Sang-Min, Kim has arrived. Where is he headed to next, and when is the summit with Putin?
That's right. He has arrived in Russia. We know that he just got out of his luxury armored train. He was welcomed with a ceremony at the Khasan station. From Khasan to Vladivostok is just 150 kilometers away, so it's actually a short trip. But we don't know if he's really headed there, and this is pretty normal. It was actually the information that's not being shared. It was pretty common, and it's even worse during his father's times. So he has some options in the Far East region of the region or the area, but he will be around the region where the EEF or the Eastern Economic Forum is happening right now. Putin just made a speech in the plenary session there, and we know that the two leaders are going to meet sometime this week, but Kremlin had said that it's not going to be during the EEF, so we're thinking maybe it would be tomorrow or the day after. This date is just not set yet, but the two will be discussing a lot of things, and this is quite of a landmark summit it will be, as it is happening for the first time in 4 years again.
So what does Putin want from Kim, and what does Kim get out of the meeting with Putin?
Putin definitely wants North Korea's help on the munitions. North Korea is one of the countries that has the largest stockpiles of weapons in the world, and they have these Soviet-era system weapons that are interoperable with Russia. So these are some of the artillery shells and even the anti-tank missiles that Putin can benefit of from Kim Jong-un. But what Kim Jong-un gets out of this meeting would be any arms deal would really benefit North Korea's faltering economy, as well as any food. They have been always seeking any humanitarian assistance on food. Also, he will need technology transfer for his pet projects like the submarine, nuclear-powered submarine, as well as the spy satellite that he has been wanting to put in the orbit.
Thank you so much, Bloomberg's Sang-Min Cha there on the very latest of this pretty extraordinary meeting. Now, coming up, Apple launches a new iPhone today. We'll bring you all of the details on that and, of course, their Qualcomm chip deal. That's next, and this is Bloomberg. Welcome back. Now, Apple's latest iPhone will be unveiled today at 10 a.m. California time. The company will also sell a made-in-India iPhone today for the first time. Now, the MacBook and iPhone maker also just renewed their contract to get modem chips from Qualcomm. Joining us now for the very latest is Matt Bloxham from Bloomberg Intelligence. Matt, we're all excited. I know Qualcomm is a big thing, but come on, tell me what's in the phone. Is it going to be like super good, super different?
Well, I don't think it's going to be super different, certainly if all of the kind of rumours we've been hearing are true. And I guess in the last few years that the rumours tend to be pretty accurate. So I think, you know, expecting the usual kind of lineup of 4 phones spreading from the kind of the standard to the kind of Pro Max. I think the interesting thing this time is given that shipments of smartphones have essentially plateaued, here it's about upselling people to the price of phones. So we think pricing might go up across the range, and certainly at the top end could be a few $100s more. So maybe we're even inching towards a $2,000 phone, which would be quite something. But ultimately, Apple needs to kind of sustain revenue growth or go back to revenue growth from revenue slump. It needs to get people to upgrade to more expensive phones, so the features in the higher end phones might also be substantially different from the lower end phones to encourage that upsell process.
So are they really focusing also on India? Because China, I mean, it hasn't been great news coming from China.
Yeah, I mean, I think they've been trying to focus on India for quite a few years. And I think definitely that'll be part of the story too, because it's a huge market. That's clearly an area where you need to be selling cheaper phones because of the kind of average disposable income. Yeah. And so at the lower end of the range, and you start to see them kind of shift some of the kind of better technology into cheaper phones to kind of lure people into the the Apple ecosystem.
Yeah, and once you're sucked in, there's no going back. Talk to me about Qualcomm.
Yeah, so they kind of re-signed this deal, which I think was a surprise from the Apple perspective and Qualcomm. So this is about 25% of Qualcomm's revenue. So you've got another 3 years of revenue that perhaps a lot of people didn't expect them to get. I think from the Apple perspective, there's a perception that maybe it's taken them longer to transition to their own silicon in this area, which maybe means some of the more exciting features that you'd expect Apple to develop in-house may be a bit slower to come onto the market than people were hoping.
Okay, Matt, as always, thank you so much for joining us. Matt Bloxham there from Bloomberg Intelligence. Now, Bloomberg has also learned that UK's Everton Football Club is close to an agreement to be acquired by 777 partners following months of talks between the parties. Now, the club owner, Farhad Moshiri, is expected to exit with just a fraction of the money invested. Now, for more on this, let's get to David Hillier. David, you're the one who broke the story, right? It's been months of your reporting, talking to sources. So first of all, why is Moshiri selling?
Well, Moshiri's been at Everton since 2016, and it's been an unmitigated disaster for him, really. He spent hundreds of millions of pounds, most of which has gone on players who just haven't performed as well as he or the fans would like. The other thing he has done, though, is he's built a new stadium on the dockside in Liverpool, which will be incredibly impressive, and that will be his legacy. He's been looking to sell for a couple of years now. I mean, things have got so toxic with the fans that board members were advised last season not to attend games because the police feared for their safety.
So what are 777?
777 is a Miami-based financial company, primarily was an investor in aviation and insurance. 21 months ago, one of the co-founders, Josh Wander, decided that COVID had presented a great opportunity to invest in football clubs that had been laid low by COVID. And he's built up a big stable of European teams.
Including Genoa.
Including Genoa,
which is my team, so I don't know whether I need to disclose that or not. But so what are these multi-clubs like 777 actually set up to do?
Well, I mean, the idea behind them is that they kind of pool resources. So they have a holding company, which then does all sorts of things in the centre, like data analysis on player recruitment. They do multi-sponsorship deals across the company, and they kind of try to benefit from economies of scale. And then there's a lot of them, about nearly 300 clubs in Europe now are part of a multi-club setup.
And so, David, overall, when you look at some of these games, this is not for the Manchester United, right, of these worlds. It's like some of these smaller companies that they can, I guess, unlock value. Are we going to see more of these medium-sized clubs being acquired? Yeah, I mean, but it can also be big teams as well. I mean, Chelsea, which was bought for 2.5 billion, has recently bought Strasbourg in France. So it's an idea. Manchester City Football Group has got 11 teams across the world. So it's big and small. But on the medium size to small size, the owners say that it's one way of kind of competing with the state-owned bigger clubs. Thank you, David, for, of course, all of your breaking news and terrific insight into this fascinating world of football. That was David Hillier. Now, in other football news, Lionel Messi is buying a waterfront mansion in Florida, costing almost $10.8 million. Now, the football superstar, was lured to the U.S. by a blockbuster contract. Messi joined Inter Miami earlier this year in a watershed deal for U.S. football. that saw him spurn an offer from Saudi Arabia. Now let's also take a look at what events we're following today away from football, although I know we're all obsessed by football. In a couple of minutes, 10 a.m. UK time, it's Germany's ZEW survey. There will be particular interest in this release, given concerns about the weakness of the country's economy. That's, of course, followed by Brazil CPI at 1 p.m. Inflation set to rise again in August to near the upper limit of the target's tolerance band. And lastly, BOE policymaker Catherine Mann is due to speak at an event in Ontario on post-pandemic economics. Up next, Bloomberg Surveillance Early Edition. Shonali Bazek in New York, Danny Berger in London, and this is Bloomberg.
This is Bloomberg Daybreak, Middle East and Africa. Our top stories this morning. U.S. stocks get a lift from a 10% Tesla surge, the most since January. So Morgan Stanley says its Dojo supercomputer may boost the value of the company by up to $500 billion. Meanwhile, the dollar drops by the most in 2 months as a survey of chief economists at some of North America's largest banks reveals most think the Fed is done hiking and will likely cut by 1 percentage point next year. Morocco's prime minister pledges to help survivors of the earthquake that killed more than 2,700 people as anger brews over the lack of an immediate government response. And as Apple gears up for tonight's much-anticipated iPhone launch, for the iPhone 15 specifically, the company its semiconductor deal with Qualcomm, a sign that its ambitious effort to design chips in-house is taking longer than expected. Just gone 8 a.m. across the Emirates. I'm Yusuf Ghamedin in Dubai. Quite a bit of caution prevailing across asset classes. I want to give you a bit of an indication of that on the S&P 500 mini. We're called lower, building on the negative move in the previous session in U.S. stocks. Currently, we're just below the flat line there. JP Morgan out with a new note. They're trimming their overweight bonds position in favor of cash. Now, look, it's not a huge move. They're boosting the cash allocation to 5% from 4%, citing a surge in commodity prices that could potentially spur higher borrowing costs. U.S. 10-year yields at 4.28. Investors shunning a 3-year auction ahead of CPI. Dollar-yen at 146.55. The market's live team thinks that this is the turning point for the greenback. And then Brent crude holding near the highs of the year. We're just about 50 cents off that per barrel, and currently just above $91 a barrel. I want to get to the story in tech, because Bank of America is talking about the fortunes moving potentially for mega and small cap stocks. One of the standouts is Tesla, popped by more than 10%, the biggest gain since January. What happened here? Well, Morgan Stanley analyst Adam Jonas upgraded the EV maker to overweight from equal weight. Tesla's Dojo supercomputer for training automated driving systems can add up to $500 billion to its enterprise value through faster adoption of its robotaxis and network services. So the price target was raised to $400 from $250. It's their top pick, and Tesla may have an asymmetric advantage in a new addressable market worth up to a total of $10 trillion. Remarkable. Also, some moves to highlight in the commodity space. I talked a little bit about Brent crude, but the weaker greenback is giving quite a tailwind to some of these metals, including iron ore, rising to a 5-month high, even though, of course, demand from China remains a bit of an uncertain variable, potentially a headwind on the demand side of the equation. I want to get out to the wider markets in Asia. David Ingles has been following all the key moves from our Hong Kong studio. David.
Yeah, Yusuf, we'll build in that metals theme in just a moment. We're certainly seeing it iron ore, as you point out, and across some of the other metals we don't normally watch very closely. Equity markets and the macro picture here, to your point, caution, trading sideways. There's not a lot of volume. I think we're about 25% lighter than usual. We're just going into the lunch break here in Hong Kong. Off lows of the day, so as you can see, we've almost erased most of the early weakness. The dollar-yen has been grinding higher quietly since we hit that session low following intervention moves yesterday. And the 10-year yield in Japan, as you can see, still holding above that 0.7% handle. We'll flip the boards because in the Japan story, there's still this rally taking place in bonds. A couple of minutes back, there was a really largely successful bond auction of 5-year notes. Very good bid to cover at a higher yield for obvious reasons. We talked about some of the breaking news in Asia. I'll talk about Country Garden, their Reuters report there, that they were able to at least get the approval from some bondholders to extend the maturity, at least extend some of the conversations around 6 of the onshore bonds. We talked about metals. I'll end on this, Yusuf, to the point you were making earlier. Mining stocks in Australia are doing well, and a lot of the contracts, as you can see on the Chinese mainland, iron ore's bottom of your screens, there we go. So that's really playing out. Pockets of strength, Yusuf, amidst really what's a quiet day in the Asia-Pacific so far. Yusuf.
David, thanks for running us through the nuances there. We'll check in with you a little bit later in the program. David Ingles. Let's get to the tech rally in more detail. I mentioned Tesla climbing 10% as Morgan Stanley said its supercomputer may boost the company's value by up to $500 billion. Our executive editor for Asia markets, Paul Dobson, joins us now for more. Paul, for those who are not in tune day to day with the finer points to the supercomputer story, to this dojo play, what would you highlight here in particular that's of significance?
Well, I think not only the potential for this and the rally that it was able to spark just by somebody shining a bit more of a light on it. And, let's face it, the analysts have been very bullish on the Tesla stock overall for a while. But I think what we saw yesterday was really this kind of future technology theme coming back in investors' view more keenly. We had not only the Tesla news, but we've also got the Apple product launch just around the corner now. We've got the ARM IPO, which has drawn in large subscriptions already, maybe closed ahead of schedule, which is being taken as another positive by the overall market. And so then all of a sudden you've got a few of these things all coming together, people, remembering the AI rally that we've had so far this year and reminding themselves that maybe there's still plenty of potential juice left in that trade. And I think that, the market has sort of been having a little bit of a wobble of confidence for the past couple of months over that whole thing. But 1% and more gains on the NASDAQ yesterday perhaps helped to rekindle a little bit of that confidence in the tech sector overall, and what we might see in the coming few days that could further kind of cement that as a trading theme for the rest of the year as well.
Mm-hmm. I want to talk about some of the macro themes, specifically the Fed. There's now a growing consensus that they are done raising interest rates and will likely cut them by roughly 1 percentage point next year. That is according to chief economists at some of North America's largest banks. What else did they say?
Yeah. Oh, so I think that what's really telling now is the market is focused more on what happens next rather than what happens right away. We know maybe the Fed has one more hike left in it. Potentially the focus being on the November meeting, not the coming meeting. There's plenty of time for more inputs to come before another decision is needed. But then it's about, what happens next year? How fast or how extreme a downturn do we get? If the economy is starting to slow, can we get that benign soft landing that Janet Yellen's been talking up with more confidence recently? For example, Or are we really going to have to hit the brakes at some point and see the Fed reducing interest rates much more rapidly? That's going to be really important for the rest of financial markets as we start to look forwards into next year. It's going to inform the trajectory for the US Treasury market, and that in turn is going to show us which way the dollar is likely to turn. Can the dollar ease off from these highs that we've seen in recent months? Has it already kind of peaked for the year? Or is it going down some more from here? If it can, then maybe that takes some of the pressure off the likes of Japan and China, which have been having to prop up their currencies by hook or crook in recent weeks and months. You know, can it help the rest of emerging markets? Because we know that a stronger dollar generally tends to tighten financial conditions for the rest of the world and be taken as a negative for the rest of markets.
Paul, terrific to get your perspective on some of the recent Fed moves and potential Fed moves to come. That's Paul Dobson in Singapore there. I want to get to a couple of bank stories. One is from Jamie Dimon from JP Morgan, and he is basically critical of some of the moves by U.S. regulators for the banking industry review. And he said specifically he would love to know what they really want to accomplish. And this was at a conference hosted by Barclays, and he questioned whether they had learned the right lessons from the failures earlier this year of Silicon Valley Bank and First Republic Bank. This is one of the stories getting the most traction on the terminal. He says central banks are the ones that told the world rates aren't going up. So if I were them, I'd have a little bit more humility over stuff like this. Jamie Dimon has repeatedly called the proposal hugely disappointing and warned that the measures will make certain activities such as mortgages and small business lending harder for banks. The other bank story I'm watching is from UBS. They're cutting their Asia wealth management jobs in the low hundreds. It comes months after completing the takeover of rival Credit Suisse. The bank is responding to muted client activity. If you're asking what's driving this, it's also China's slowing economy. And they have identified overlapping roles in the past few months, and further cuts are actually expected through November. That's according to people familiar with the matter. They asked not to be identified because the plans are private. At least 100 positions could go. One of those people said the lender is going to eliminate roles that include relationship managers in Hong Kong and Singapore, the majority within teams newly acquired from Credit Suisse. The number of cuts hasn't been finalized, so bear that in mind. That's your year-to-date performance. We've seen quite a rally through August, just giving back a little bit to 22.88 Swiss francs a share. Here's what's still to come on the program. We'll get to the outlook for the Middle East markets with Franklin Templeton. The CIO is going to join us, Dino Kronfol, to discuss the UAE plans to sell at least $1 billion of US dollar bonds. But up first, we'll discuss the risks facing global markets with Janet Mui of Brewin Dolphin, ahead of key US economic data. This is Bloomberg. U.S. equity futures are flat this morning after gains during the cash session, fueled by a 10% rally in Tesla on the back of a Morgan Stanley upgrade. The dollar dropped the most in 2 months amid growing consensus that the Fed might be done hiking. Stocks in Asia are also flat today with China's recovery in focus. I'm going to bring in Janet Mui, the head of market analysis at RBC Brewin Dolphin. Janet, what is the one driving variable that is the very top of your agenda as you sit down with clients this morning?
Hi, good morning, Yusuf. Thanks for having me. I think inflation continues to be a very important thing that we talk about, especially I'm in the UK. So our inflation here is higher than many other economies and pretty sticky here. And as a result, there are talks that the Bank of England will have to stay pretty hawkish, and there could be another 1 or 2 rate hikes. So I think this is always a discussion amongst our clients.
Okay, Janet. I look at some of the U.S. CPI forecasts, and we have the chart on the terminal that shows core inflation year on year and core inflation month on month, with the consensus seeing a third month in a row of 0.2% gains. Run me through what a surprise to the upside would do in terms of repricing rates and repricing our understanding of the Fed.
Yes, I think so. Consensus already expecting a reacceleration in the headline US CPI. So of course, if we see a higher number than 3.6%, I think bond yields will go up, and people will refocus again on the role of energy prices on that headline CPI, and that usually has quite a good relation on inflation expectations, at least for the short-term US inflation expectation for consumers. So I think that is something to notice. But I think more importantly, it will be the core inflation, right? So consensus expecting a deceleration in the core inflation because of the housing component coming down and also the used car price sales, etc. So if we get a higher than expected core CPI, I think that would be more problematic, because this is something that is more important, right? The core, especially the super core inflation, that has come down nicely actually over the past couple of months. So if we see that derail, I think that would be more problematic for the bond market.
I know you've been a little bit cautious, or more cautious, on U.S. stocks, but you've always said that fundamentally you liked some of the AI themes that have emerged in the last few months. Janet, when I look at a Tesla stock that's popped a little bit over 10% because of this Dojo supercomputer, do you see a renewed opportunity to take part in sort of a second leg of this narrative?
So first of all, we don't individually look at Tesla as a stock. And we generally think that the thing that is holding us back is really valuations. And we like the theme generally because actually for the longer term, US equities, particularly tech, tend to deliver that superior earnings growth, which justify a high valuation. But we just think that currently, given the macro environment, it could be a little bit unsustainable, particularly because of the higher bond yields and the fact that markets are pricing in a higher for longer bond yield scenario. And the tight monetary policy environment is generally not going to do well for these valuations. But generally, we like the theme. We are currently overweight in cash. So if there is a pullback in the market, if we judge that the monetary environment is going to turn more favorable sometime next year, we would be looking at adding to some of these themes.
The other theme throughout this week has been on Japan. It doesn't really matter which asset class. I mean, it's all driven by Japanese monetary policy and some of the commentary from the Bank of Japan governor. I look at a quote from Ben Emmons, and he has studied some of the linkages, the cross linkages all the way out to the U.S. He writes that the linkage between the U.S. fiscal policy and Japanese monetary policy is strengthening. The expectations for lower yields in the future remain high, but the BOJ changing policy can rattle bond bulls on a regular basis. Do you expect the Bank of Japan to do a complete switch before year-end? Because that is where the real debate is, isn't it?
I think that's possible. And if they were going to do it, it's going to be a surprise move. Because otherwise, if they kind of flag it well in advance, or it could be quite costly to defend the strategy. So I think it could be a surprise coming before the end of the year, primarily because the macro environment in Japan is really seeing some changes. We see inflation coming back. We see that wage growth coming back, and also people are more engaged in their wage settlement negotiation. So this is quite interesting. So and also, if you look at the macro data, it's actually doing okay. I mean, the services PMI is actually accelerating instead of the ones that we're seeing in Europe, for example, which is deteriorating pretty quick. So I think there's a case for a changing policy stance from the Bank of Japan, and we won't be surprised if it happens.
It's a remarkable contrast, isn't it? Janet, thank you so much. It's been an amazing chat. That's Janet Mui, the head of market analysis at RBC Brewin Dolphin. Well, in the meantime, the Heyman Capital Management founder and CIO Kyle Bass has spoken to Bloomberg. He says that Apple is set to face a long period of distress in China. He told us how geopolitical tensions are becoming a key risk for the tech giant's future performance.
Apple, from what I can see, expects to sell 45 million iPhones in China this year. With the ban at the national level and maybe even the state-owned provincial levels in China, I think the difference between the U.S. government banning something for government employees and the Chinese government banning something for government employees, the people of China will, let's say, focus more on the state than they will on the market-based economy or the so-called market-based economy. So, whether it's the renewal cycle of 4 or 5 million iPhones this year, or whether it's the actual 45 million they expect to sell, I think Apple is in for, let's just say, a much longer period of distress in China. And I think you've seen Apple try to move to India on the production side, and they've been successful in moving a very large portion of their production in a very short period of time.
Yeah,
I just think that's going to be something they're going to have to do.
And then to that point, you just saw President Biden in Vietnam, for example, and a lot of JVs being formed there with U.S. companies. So it begs a question for me, like, if you look at a stock, do you have to see, is it as simple as you get X amount of percentage of revenue from China, therefore I have to short you or not invest in you?
Oh no, I think it's really simple. Where does Apple trade on a forward sales basis, and what percentage of their assemblies are done today by Foxconn in China? And that number's coming down, but it's still a big number. It's still north of 60%. So I think that Apple is one of the companies. It's the most widely held stock in America, and it is one that unfortunately that could fall in the crosshairs of Xi's ambitions with Taiwan. I think it's worth talking about. I mean, Warren Buffett didn't sell his Taiwan semi position because he thought it got too expensive or that it wasn't a great investment. I think the geopolitical atmosphere is something that it came into play in their decisions with Taiwan semi. I think the last 20 years of the world has been driven by economics and economic interests, and I think we're at a hinge in history now, where the next 20 years are going to be driven more by geopolitics than they are about economics. And so if you own Apple, I think you should consider what a belligerent Xi Jinping could do to your portfolios.
Apple stock up about 38% so far this year, even after dropping below $180 a share. That was the Heyman Capital Management CIO Kyle Bass speaking with Alex Steele. So much more to come. This is Bloomberg.
Today is looking deeper at our ESG plans, then putting out a supply chain fire, then getting a last-minute briefing on cybersecurity. My priorities don't just shift, they shift by the hour. That's where I need Aon. Their combination of advanced analytics and expert insight keeps me up to speed and ready for my next move. Better decisions. Aon. Today is looking deeper at our ESG plans, then putting out a supply chain fire, then getting a last-minute briefing on cybersecurity. My priorities don't just shift, they shift by the hour. That's where I need Aon. Their combination of advanced analytics and expert insight keeps me up to speed and ready for my next move. Better decisions. Aon.
Morocco's prime minister has pledged to help survivors of the earthquake that has killed more than 2,700 people, including financial assistance for the reconstruction of homes and schools. It comes as rescue teams race to reach remote areas where anger has been brewing over the lack of an immediate government response. Bloomberg's Abir Abomar joins us now with the latest updates. Abir.
Good morning, Yusuf. So, yeah, I mean, the Prime Minister came out yesterday and he said that there will be assistance given to families, the families in the villages that have been affected by this earthquake. So far, more than 2,700 people have been found dead and more are critically injured. So far, getting access is still an issue. It's still complicated because of the epicenter of the earthquake where it happened. It's still a major issue for the rescue teams that have been deployed. But I think what's important to note is that this comes at a time when you're finding a lot of discontent among the Moroccans that have been affected. They're angry at the government because the government is not getting proper aid, is what they have said. So the government has accepted aid from 4 countries: Qatar, the UAE, the UK, and Spain. We've heard reports about it not accepting or not yet accepting aid from other countries, including Turkey, for example. So a lot of Moroccans are feeling some kind of discontent. We have, a really sad anecdote in our story from a reporter who's on ground for a woman who said that she and her brother had to dig through the rubble to find her deceased parents. And this is incredibly sad, and this is what a lot of Moroccans are going through. I am looking at the images now. But what I want to note, Yusuf, finally, is that we spoke to some of our sources in Morocco, and they have told us that the IMF and World Bank annual meetings are going to go through as planned.
Yeah, I was going to follow up on that, on the meetings. They're still sticking to their guns as of now?
So far, that's what we know. The IMF and the World Bank haven't come up with official statements saying that they will go through. But again, we have reached out to our sources in the Moroccan government. They're in talks with the IMF, and one official told us that the show will go on and that the Moroccan authorities will urge the IMF and the World Bank to go through with the meetings. Now, it is expected to be smaller, but these annual meetings have a history of happening after disasters. If you remember, in Bali 2018, the meetings did go through after a tsunami that hit Indonesia and killed 4,000 people. And we saw then Director Christine Lagarde touring the site of the tsunami.
Amir, thank you for getting us up to speed. That's Amir Awar reflecting as well with some of the wider Bloomberg News reporting that's been done on this. I want to get to the Middle East markets and give you a bit of a snapshot of how things were in the previous trading session, mostly positive across the board, with gains being led out of Saudi Arabia, up 0.75%. There's an important corporate story to highlight, and this is out of the Abu Dhabi wealth fund, Mubadala Investment. They've formed a strategic partnership with the private credit heavyweight Blue Owl Capital. They're committing $1 billion to the firm's credit platform, and the deal highlights some of the growing interest from the Middle East Wealth Fund. It's actually the largest commitment to Blue Owl's technology lending strategy so far. That's according to a person familiar with the matter. Much more coming up. This is your Bloomberg. This is Bloomberg Daybreak, Middle East and Africa. Our top stories this morning. U.S. stocks getting a lift from a 10% Tesla surge. That is the most since January, as Morgan Stanley says its Dojo supercomputer may boost the value of the company by up to $500 billion. Meanwhile, the dollar drops by the most in 2 months as a survey of chief economists at some of America's largest banks reveals most think the Fed is done hiking and will likely cut by 1 percentage point next year. Morocco's prime minister pledges to help survivors of the earthquake that killed more than 2,700 people. His anger brews over the lack of an immediate government response. And as Apple gears up for tonight's much-anticipated iPhone 15 launch, the company extends its semiconductor deal with Qualcomm, a sign that its ambitious effort to design chips in-house is taking longer than expected. Let's get back to some of the market action for you. Caution prevails as we hover around the flat line on the S&P 500 mini. We're marginally lower by about 0.1%. Folks at JP Morgan have trimmed their overweight bond position and they've boosted the cash position. You're going to ask me what are the percentages? They're actually not huge. So the cash allocation goes to 5% from 4%. They're citing a commodities price move that could potentially spur higher borrowing costs. U.S. 10-year yield at 4.28. Dollar yen at 146.70. The market's live team believes that this could be a potential turning point for the greenback. And then Brent crude holding close to the highest level since November of 2022. I want to zoom in on Tesla. We mentioned it in the headlines, popping more than 10%, the biggest gain since January. Morgan Stanley upgraded the EV maker to overweight from equal weight. So this is because the Dojo supercomputer for training automated driving systems can add up to $500 billion in its enterprise value through the faster adoption of robotaxis and network services, in theory. Now, software and services revenue will become the company's biggest value driver, they go on to argue, and the price target moves to $400 from $250, and that is their top pick. We're currently at just above $273 a share. The other news we've had out over the last couple of hours on the energy front, outside of the price move in itself, was news that the United States is clearing the way for $6 billion in oil proceeds to be returned to Iran. They also agreed to release 5 Iranians as part of a secretly negotiated deal that's going to clear the way for 5 American citizens detained in Iran to return home. The Secretary of State, Antony Blinken, has notified Congress, and this is part of a waiver that will let German, Irish, Qatari, South Korean, and Swiss banks transfer the $6 billion from South Korea without the fear of running afoul of U.S. sanctions. Currently, intraday Brent and WTI slightly higher. I want to check in on the markets more broadly in Asia. David Ingles has all the important lines from our Hong Kong studio. David.
Yeah, Yusuf, thank you. And I'm glad you ended that note there on oil. And I'll continue that looking at other commodities that are seeing really the most gains or the most movement in what's otherwise a fairly uneventful trading session. Some of the contracts traded on the Chinese mainland. We have iron ore, bottom of your screen. So you're also going to see some of the big mining stocks in Australia, perhaps also getting a lift from what you're seeing here on your screens right now. The other potentially still market story, lack of kinetic energy, as you will, still potential really, is really day 2 question mark in Japan, where we are getting somewhat of an answer on banks continuing to rally, not to the extent yesterday of higher yields, better for the banks, stronger Japanese currency, weaker currency today. What we did get, though, was a fairly strong auction today on the 5-year note about an hour back. 10-year yield still holding above that 0.7%. But as I was pointing out, apart from those two, and maybe the Country Garden story, let's flip the boards, please, if we can, which, as you can see here, is gaining. It's generally a forgetful day across the region right now. Volumes across the Asia-Pacific, Yusuf, are about 25-30% lighter than usual. So a lot of people are sitting this one out, at least for today. Yusuf.
Yeah, that's nothing short of jaw-dropping, those figures, 25 to 30%. Yeah, so we'll see what happens when that volume comes back, post some of the important economic data that's coming through for this week. David, thank you. David Ingles there with the roundup. I want to get back to this part of the world because sources have told Bloomberg that the UAE plans to raise at least $1 billion in dollar bonds as soon as this month. The government has mandated Citigroup, Mashreq Bank, Goldman Sachs, and Mizuho, among others. Let's bring in Dino Kronfol. He's the CIO for Global Sukuk and MENA Fixed Income at Franklin Templeton. So, Dino, there was a while when there was a little bit of a lull, summer lull, and now we're coming back with potentially a little bit of force. What do you think is going to crystallize in terms of pricing from this UAE move?
I mean, the UAE is one of the strongest credits in the region, and having some sovereign issuance is very consistent with the pattern of issuance we have. I mean, sovereigns typically issue almost half of the bonds in the region, 46% to be more precise. So this is not a need-based type of issue. They certainly aren't running large deficits, but this is more of a market development type issuance, and will be very welcome and will find ample demand. Issuance, just in general, maybe for the benefit of everyone, is up about 80% this year. So the GCC has certainly had a pretty strong rebound from what was a fairly lackluster year in terms of issuance last year. But things are looking certainly pretty positive.
When I look at the spread of Gulf bonds over treasuries, those spreads have remained relatively resilient. As we count down to U.S. CPI, what do you think we're going to get from the Fed, and how is that going to ripple through to this part of the world, if at all?
I mean, credit spreads have been surprisingly resilient. I mean, that's been one of the key surprises, I think, this year. But our view is that, I mean, as we kind of, exit this rate hiking cycle and enter what we consider a peak rate environment, we think spreads could be under some pressure. And so our preference certainly is to remain very cautious on credit, remain in very high quality issues, which in the GCC, gives us quite a wide selection. I mean, this is a very high quality part of the emerging market world.
One thing that we've taken from your latest research, well, it's actually two things. There's two tables in there.
Yeah.
And you've talked about some of the broader asset allocation dynamics. You went all the way back to 1989, and you compare your 10-year, your IG spread, and we have it up right now, the S&P, and sort of commodities. Run me through sort of the important shift that we may be in right now.
So when you move from a rate hiking cycle into what we call a peak rate environment, that's typically good for duration, good for bonds, because they typically, on average, decline about 90 basis points. There's obviously examples of it declining more. But when you look at some of the other risk assets, equities, commodities, and spreads, they tend to struggle a little bit more. And then when we move into a rate cutting environment, which maybe next year, or we'll have to see how things evolve, then it becomes particularly, more challenging for things like commodities and spreads. And so when we think about the GCC and, the dependence on oil, that presents a bit of a challenge, because on the one hand, we like the duration. We think the high quality is advantageous. But on the other hand, we think weaker oil prices could present some challenges.
I want to build on what the Markets Live team has been writing about in terms of potential turning point for the U.S. dollar. Do you subscribe to that view?
Yeah, but again, this cycle has been very weird in the sense that everything's taken a lot longer than it normally would.
Exactly. So Stanchard last week, they initiated a tactical short on the U.S. dollar, and then a week later, they're like, you know what? We're out of here. This isn't working.
Yeah, so in theory, one should be taking an opposing view. The dollar should weaken if you're expecting them to start cutting rates. But I think this uncertainty around when they're going to cut rates and how resilient the U.S. has been has thrown all of these projections a little off. But I think if we take a longer-term view, we feel pretty confident that we are at the end of the cycle. We may be in this peak rate environment for some time, but eventually you're going to start seeing the cumulative impact of all these hikes have an impact. And as we start cutting rates, risk assets will struggle, spreads will widen, and duration will do well. So this is a good time to be increasing your fixed income allocations for sure.
One thing that's stood out in the last few hours is that Brent crude is sort of creeping back to a new high for the year. We're just 50 cents a barrel off of that, north of 91. Is that an accurate representation of the current dynamics between supply and demand? Would you say that this is just a temporary high and that the reality of weaker demand is yet to set in?
I would think that we're just at the top end of this $20 range, the $70 to $90 range, and I would be of the view that we see slightly lower oil prices as we go forward. I mean, to get to 90, I mean, it has required, 2 or 3 interventions, cutting production, etc. It's not like it came there naturally. I mean, the one caveat to this, again, is that supply, with all the geopolitical issues that we have, is always a bit tricky. But I think from an economic point of view, I would subscribe to the range-bound, $20 range of 70 to 90, and we're currently at the top of that range.
Dino, big fan of our chats. Thank you very much for making it to the studio. That's Dino Kronfol. He's the CIO for Global Sukuk and MENA Fixed Income at Franklin Templeton. So have much more to come on Daybreak Middle East and Africa. This is Bloomberg.
The more my company grows, the more hats I need to wear. Aon brings their whole team to the table, giving me access to the great minds in each discipline. So as my business grows, my knowledge expands, and I see things more clearly. Better decisions. Aon.
Shares in the global food and agricultural company Olam plunged the most in more than 3 years yesterday as it denied allegations of a multi-billion-dollar fraud in Nigeria and ordered a review into the matter. Bloomberg's Jennifer Zawazaja joins us now for more. So what are some of the allegations that have been put on the table?
Yeah, Yusuf, I mean, this was, you just looked at the shares there of Olam Group, slightly up from what we saw yesterday. But this is what you mentioned. It's tied to a multi-billion-dollar fraud allegations. And we heard that from two specific Nigerian outlets making the accusations on Monday of this major employer of Nigerians in the country. And what they are saying is that essentially, there have been multiple subsidiaries existing within the country that have not been paying their funds. The funds have been mismanaged. And what we're hearing from Olam Group is that they're categorically denying these claims. They're saying that they're baseless and they're inflammatory. But still, these allegations did enough to plunge Olam Group shares on Monday. As I mentioned, what you're seeing right there is down just about 8%. But what we saw on Monday was they fell nearly 8.6%. And this is significant because this is a major manufacturing group. As I mentioned, it's a major employer within Nigeria and, of course, within the agricultural sector. And so did enough damage to cause some ruptures within the shares on Monday. We'll see whether or not or how this plays out exactly, considering they're denying the allegations.
It's already been a long glide off 171 a share in terms of the 52-week high, and then this additional sell-off that we got in the last trading session. In the meantime, in South Africa, inflation expectations, let's talk about those because they declined for the first time in 2 years. Where is that deflation coming from?
Yeah, I mean, this is significant. You mentioned this is 2 years, and really this economy here in South Africa has been enduring a number of headwinds. And so what we got on Monday was, for the first time in 2 years, these survey results from a significant research firm here in South Africa saying that expectations are expected to decline. You're seeing those numbers there on the screen right now. What they said, average inflation in the third quarter in 2023 falls to 6.1% from 6.5%. 2024, the same thing, down from 5.9%, excuse me, to 5.5%, and also 2025 coming down exactly. And this is all just due to downward revisions by a number of business people and trade unions here in the country. And why this is significant, I mentioned that this is a really important indicator for the central bank here in South Africa. And so it's really, we're wondering whether or not this could potentially have an impact on what we see from the central bank. And we should note that the central bank governor, Lesetja Kganyago, has really sort of kept up his hawkish tone about his fight against inflation. Just last month in Jackson Hole, saying that there are still a number of concerns, specifically around currency weakness. And so whether or not this will do enough to influence the central bank to potentially hold rates is another story. But this is significant considering the price pressures that the South African economy has been enduring over the past few years.
And then finally, the United Arab Emirates is lifting a visa ban placed on Nigerian travelers. There was a big meeting between the two heads of state. What else came through?
Yeah, big meeting between President Tinubu and the president of the UAE. What we know now is that they have agreed to lift this ban that was placed in October of 2022. This is significant for a number of reasons, one of which being that this means that there will be the immediate resumption of flights between the two countries. We saw the Emirates, in particular, the UAE airline, halt flights. They said that that was due to issues with trapped funds in the country. We also saw Etihad Airlines stopping flights early on in the pandemic. And now this potentially opens the door to flights and to traveling between the two countries. And this is important for Nigerians because there is a lot of travel that is done between the countries. And what we also heard is that these two leaders didn't just agree on this visa ban being lifted, but they also agreed on billions of US dollars in investments being being made into the Nigerian economy from the UAE. And this is, of course, sort of off the back of what we've seen from President Tinubu since he was inaugurated in May. And so, you know, we're going to have to see how this relationship plays out. But this could potentially open the door for other African countries if you know, we do see more of these types of agreements happening.
Absolutely, Jen. Good to see you. Thank you for that. That's Jennifer Zabazaja in Johannesburg. Now, a 13-month-old chip-making startup backed by the Japanese government is aiming to build the country's own version of TSMC from scratch. The Rapidus CEO spoke to us exclusively about the company's ambitions, and it includes turning a remote Japanese region into a center for chip innovation.
TSMC and also Samsung is a great company. We always respect their business model and their manufacturing technology so well. And also for us, we don't want to compete like the same market as well. We will manufacture not so much large volume yet, but also we would like to challenge new additional like the characteristics chips with ultra low power chips or high speed like the chips, and with new technology. Also, that is issues we would like to create with the company, customer, who can create new values. So that is, we need a very much close relationship, work together. And also the other differential point will be speed. Our company can make, we are estimating 2 times faster than other company. That will be the key point for us.
So you started this company from scratch.
Yes.
You have 200 employees. As you go forward, how many do you think you're going to have, and what's the ideal ratio of, say, Japanese to foreign employees in your company?
Of course, we don't want to be just only Japanese. We would like to work with worldwide talented people. So I don't know have a currently actual number yet, but we are welcome if they have a kind of big challenge or new ideas. We are very much eager to work with worldwide talented people.
So if you go from 200, what's the limit? I mean, how far do you go? How many employees do you expect to have in the next 6-7 years?
Hokkaido will be a great place, but not so many people yet. So that issue, I'm very much afraid to compete with other industry people, others. So we are really too eager, like the people who had work from US or EU or like India's people, if they are very much interested in work in Hokkaido, we are welcome to join our company.
The Japanese government has promised to support what you're doing. I mean, how long and how much support do you think you may need from the government?
We are very much honored Japanese government, and the METI support us very well. And also even for our groundbreaking, and Prime Minister Kishida mentioned they will prepare a great package for us. And also Nishimura-san, Minister Nishimura-san, also not only this year, they are continuously to support our company. And so key is, according to Japanese law, we cannot say actually how many years, how long years, but key is once we show every year a key progress, at that time Japanese government METI will continuously support us. That is issue I believe.
That was the Rapidus CEO speaking exclusively with Bloomberg Editor-in-Chief Emeritus. That is Matt Winkler. Still much more to come. This is Bloomberg.
There's a place where global markets are always open, where you can explore and discover innovative new offerings and hundreds of trading products right at your fingertips. That's CBOE, the exchange for the world stage.
We get the latest read on the UK jobs market in just over an hour. Bloomberg Economics expects this unemployment rate to tick up to 4.4% in the 3 months to July. That's higher than the 4.1% that the Bank of England sees, but more importantly for the central bank is going to be the wages data. Let's bring in Leanne Gerrans from London with a full preview. Leanne, take it away.
Yes, indeed, Yusuf. You're completely right. We get that slew of labour data in, but the Office of National Statistics at 7 a.m. is going to release the wage growth data, which is really crucial and will be watched really closely by the Bank of England, especially because we've got that meeting of the MPC on the 21st of September, which is something that will be watched out for. Now, what we can expect is we can expect wage growth to be higher than inflation when those numbers do come in a little bit later on today. And Bloomberg Economics expects that wage growth is going to grow to 7.9%, and that is from 7.8% previously. Inflation right now stands at 6.8%, and this is going to be of real concern because this means that wage growth is still growing faster, and it's going to be very difficult to get down to that 2% target for inflation, which is something the government has really set its sights on, especially the Prime Minister, Rishi Sunak. He says his number one priority is to bring inflation lower. So when these come out, it will be something that will be closely watched by the markets and also, of course, by the Bank of England ahead of what they're going to do when they raise rates or decide not to at the next meeting.
Cable at the moment at 125, flat as flat can get. But in the meantime, you've got Chancellor Jeremy Hunt, who says there are not many changes for tax cuts in the autumn statement. Is that right?
Yeah, that's absolutely right. And that's basically what he did say to Bloomberg yesterday. He was speaking on the sidelines of that G20 summit. We knew that was happening in New Delhi in India. And the autumn statement is happening in November. And there's lots of speculation, Yusuf, about what's going to be in the autumn statement. And tax cuts is something that's being brought up. But once again, Jeremy Hunt says he's just got no room at the moment to deliver those tax cuts. That's really because inflation has blown a massive hole in the finances. So he's saying instead of pumping money into people's pockets, it's important to bring inflation down and make sure that 2% target is reached as promised by the end of the year.
Yeah, we can't wait for the data to come through in the next few hours. Leanne, thank you for that. That's Leanne Gerrans in London. We're also going to get a price increase potentially with some of the new Apple products. We're counting down to the big Wonderlust event that's going to take place at 10 a.m. local time in the U.S. The most significant new product being the iPhone 15 Pro. More minor refreshes coming to the Apple Watch and the AirPods. Much more ahead. This is Bloomberg.
There's a place where global markets are always open, where you can explore and discover innovative new offerings and hundreds of trading products right at your fingertips. That's CBOE, the exchange for the world stage.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, the US, it opens a formal investigation into those made-in-China chips used by Huawei. We'll have the latest on what it means for the US-China relationship.
Plus, more on what China's iPhone ban means for Apple after the company saw $200 billion wiped off its market cap. We discuss with Mel Lagomasino of We Family Offices and Julie Ask from Forrester.
And we'll check the pulse of the IPO market. Instacart prepared to go public in the coming weeks. Brandon Inch is from Equities Den with us. But first, let's check in on these markets. These public markets, before we go to the private ed, are actually getting a bit of a reprieve today. We're just going to bounce a little bit in the Nasdaq. We're off about 0.4%. Maybe that's even despite some pushing up on the yields. Only on the front end, though. We are seeing a calming across the yield curve more broadly, maybe a bit of buying at the longer end. We've seen the 2-year yield, though, still holding at about 4.96. Down from that 5% high, but all of this speaks to macro concerns about the US, how far Federal Reserve has to keep those rates high for, and what's happening abroad, particularly in China. I shine a light on what is a record low for the offshore yuan over the past day. And indeed, it seems as though China's willing to let its own offshore yuan go lower, see weakness, because of course it helps their exports. But at the moment, it is this tug of war happening in China, and we see it expressed with desire to get into the US dollar, although the dollar benchmark is just managing to calm after its rampant rise today. Let's have a little look what's happening in the world of crypto. After I say that rise in the US dollar has actually put crypto under pressure for the last few trading days. We remain in this sort of new normal when it comes to Bitcoin, at least. We're at 25,838, so kind of a steady trading range. The minor blip in earlier trading today, Ed. But go into some of the micro, the individual companies we're watching.
Yeah, the main story has been China, but also Apple, as you know. We're rebounding Friday, up 1%. But remember, across Wednesday and Thursday's session, Apple shed almost $200 billion off its market cap. Why? Because China's central government, as Bloomberg reported, expanded the number of government agencies and state-backed enterprises that it was saying, tell your staff to leave their iPhone at home, switch to a domestic player. That really weighed on the stock. We are now rebounding. The chronology and timeline here of the news flow is immense. That's why I'm looking also at shares of China's Semi-Manufacturing International Corp, or SMIC, or SMIC. Down 7.6% over the last couple of sessions. It rebounded a little Friday. The news flow was twice. We're going to get in a moment to our reporter about the US government investigating the chip that they manufactured inside that latest Huawei phone. But Huawei also teased another latest phone, the Mate 60 Pro Plus, which boosted SMIC shares a little. That's where we stand. Let's head out to DC and our reporter Dan Flatley. Dan, what we know is that the US has opened an investigation into that 7-nanometer processor that was found inside the Huawei phone that Bloomberg did a teardown on. Which agency is looking at this, and what do we know?
Right. Yes, that's right, Ed. The Commerce Department is going to lead this probe. And we know that we got some news overnight that we were expecting for the last several days, which is that the U.S. is opening its official probe into what is actually in this phone. So it will probably be the Commerce Department's Office of Export Enforcement, which is going to look at this potentially in cooperation with some other federal agencies, maybe the FBI, maybe some other folks, to determine the provenance of this chip, how it was made, if they can determine that, and sort of try to figure out where we go from here.
Of course, it's the Commerce Department, Dan, that's been smarting by the timing of all of this. Gina Raimondo was in China when Huawei rather quietly unveiled this new product. Do we think that there might be a change to policy here?
It's certainly possible. I mean, if you look back at what the Biden administration has done on chips and semiconductors and these really important technical instruments and the export of these things to China, they've really tried to clamp down on some of the higher-end chips and some of the higher-end technology that's gone to China. And that's all part of a concerted effort. It has military dimension to it. It has an economic dimension to it. It kind of encompasses both. But it's really focused now on one phone or a couple of phones. And Apple has sort of gotten drawn into the mix here. We sort of have, the Star Wars fans will have heard of the Clone Wars. Well, these are sort of the phone wars, if I could be somewhat flip about it there. But the truth of the matter is that this is kind of the apex or the focus of a lot of where the national security establishments, both in the U.S. and in China, are looking, because these chips have important implications beyond just commercial applications.
I think a Star Wars analogy is totally appropriate for this show. Dan Flatley, we thank you so much. Meanwhile, let's talk about the valuation implications, not just for Apple, but across the board. Very pleased to welcome Mel Lagomasino, We Family Office's CEO, and really someone who's been thinking a lot about the valuations, the outperformance of tech. But at this moment, is this yet another headwind, this geopolitical risk that we see, certainly for China-exposed tech names?
I think it's a tremendous risk. And I think that what's going on in China is that politics is going to trump economics. And I'm surprised it took them this long to actually ban the iPhones after what we've done to Huawei. And I think they timed it not just with Gina Raimondo's issue, but visit, but they also timed it right before Apple announces its new phone.
Timing is pretty impeccable on their start, and certainly from a media perspective, but from a buying perspective, from how this unfolds, are you expecting supply chains to be impacted? Are you worried and looking at arms exposure as they start to look to come to the market publicly, as we think about a Tesla that has a lot of focus on a Chinese consumer?
Right, and I think that there's two things. From the Chinese side, they have so many of the Chinese citizens working on all the supply chains for all these companies that I think that they have to be careful in terms of how all of these measures are put into place. But on the other hand, I think that it's important to recognize that China's political agenda is so strong and it's so important to the government that that is going to trump every time, even the fact that it might hurt their own people as they really ban some of the uses of Western products. And I think actually that one of the most dangerous things is the anti-American feeling that could prop up because of this nationalistic push. And that means that people that are not in government offices, people that are not in state-owned enterprises, will actually start to not buy American products.
Mel, good to see you. Ed here in San Francisco.
Hey, good to see you, Ed.
As a technology investor, in the balance of risk, this was the year of the Fed and when we will end the rate cycle upwards, the year of AI. Now you have China. And how do you assess the balance of those risks? Which one do you apportion most worry to?
Well, I think China is a huge risk, but I think that the momentum of AI is going to be much greater and is going to have much more impact for investors. And I think some of the estimates are that AI is actually going to add $1.5 trillion of productivity to the economy over the next 10 years. And that's going to be huge. And so I think that, one of the things that's going on is that, and it's what's great about U.S. businesses is that they reinvent themselves. They figure out how to deal with these risks. I mean, there is already a tremendous amount of friendshoring going on. There's a tremendous amount of de-risking that's going on in terms of China. And so I would give more weight to AI than I would to China.
The guys over at JP Morgan have a note out and they say, China's a headline risk, but they also point out it's a name that was trading at 27 times forward earnings. And so I wanted to ask how you kind of view the Fed as it relates to the technology sector right now.
Well, I think that it got a little ahead of itself, and actually we sold down on some of our tech stocks, or some of our growth stocks, and actually invested in value stocks because I think the difference in the multiples are significant, and over time they tend to even out and balance. So for our investors, we suggested taking down some of the profits that they had in the tech stocks and actually rebalancing into value stocks.
Okay, so even as you talk about the productivity lift that AI will give, you were thinking take profits. Is there any area that is still yet to see the rampant rise and implication of AI?
Well, I think what's clear is that the companies that basically are dealing with the infrastructure of AI are going to keep on going. The question is how fast is the market valuing them ahead of their actual earnings? There's no question about what we don't know, and I think what's much more difficult is how is AI going to impact the regular businesses that we all do, and what is that going to mean in terms of our earnings, our productivity, et cetera? That's the harder picture.
It's very easy to just talk stocks, but you are diversified in your viewpoint and indeed in your asset class. When you're looking at growth versus value, are you thinking that across also the bond market as well? Are you thinking about in other types of ways in which you gain exposure to technology, not just in an equity basket?
Well, I think when we think about our investors, we think about overall returns, right? And overall returns over a long period of time. And I think what's really interesting is that now the fixed income market in corporates, very liquid, very high quality, you can get 6 or 7%. If you look at the long-term capital market expectations for the U.S. equity markets, it's about 7 to 8%. and you think about the volatility of the equity markets, I think fixed income, high quality fixed income, is actually a great opportunity right now for most investors.
Mel, every time you're on the show, we talk about the big names, Apple, Nvidia more recently, and then you surprise me with your top picks that are something a little bit different to what people are talking about. Which corners of the technology market specifically catch your eye right now?
Again, I think that all of the sort of the companies that are working on the infrastructure that's going to be required for AI, because I think that's the most obvious. The other ones are a lot less obvious.
Mel, next Tuesday I'll be down in Cupertino at Apple for their next iPhone event. Is that something that you watch? Do you sit there, watch the whole thing and think, my goodness, this is a big tech event, or it's not?
I don't personally watch it, but I read all the stuff and watch all the stuff that you report on it.
All right, tune in then next Tuesday. Yeah, I will. All right, tune in next Tuesday. B-Tech on the ground in Cupertino. Mel Lagomasino of We Family Offices. Very good to see you. Thank you so much for your time. Now, coming up here on the show, highly anticipated IPO coming next week, ARM. We're going to get details on that, but also the current tech IPO landscape. That's next. This is Bloomberg Technology.
Just an unbelievable place. It's a cultural oasis, and I've been given an incredible opportunity to pursue my dreams here as the head chef inside its world-renowned restaurant. Get the dessert out. I mean, people travel from all over to experience my food. It's a place for fine dining, arts, and events. And it's my home, a reflection of Saudi's culture and beauty.
Sick of talk about IPOs yet? Nope. We have got a new name for you. Of course, it's back. Turo, a car-sharing business. It's restarted those plans that it had to go public, and it could list shares as early as this fall. That's all according to one key reporter who's joining us now, Bloomberg's Katie Roof. Just talk to us a little bit about Turo, the name, and why they might be analyzing the market right now.
Sure. And so Turo, this is a car sharing service. It competes with Getaround, which went public through a SPAC last year, and they're down over 90%. But Turo is still optimistic. What we hear from sources is they're hoping to do a roadshow as soon as October in order to debut this fall. I mean, they are one that has been trying to go public for a while. They did the rare move of revealing their finances early last year and then not going public right after because they realized the window had closed. And so we're hearing they see that the window is open and they're hoping that it will remain.
Interesting one. You look at Bloomberg's second measure data, Turo is the much bigger player in the US, Getaround the much smaller, but you referenced their SPAC listing. Since then, they've fallen to a market cap, Getaround, of 37.7 million. Be interested to see where Turo gets valued when it goes public. Bloomberg's Katie Roof, thank you very much. Let's stick with the IPO market and bring in Brianne Lynch, EquityZen's head of market insight. Brianne, Turo's the latest name on the flywheel of what's to come. I want to start with ARM, because how closely do you think the market looks at ARM, how it does, and then decides on the other IPOs that we think will come later?
Thanks for having me. I think the market is going to be looking very closely at ARM, regardless of the fact that it's not a great apples to apples comparison to some of these other companies. It's a company that was public, was taken private by SoftBank in 2016, and is now re-entering the market. So, you can't really apply that same, background to some of these other companies, but regardless, I think it will be a good measure of investor interest in tech and AI-related companies. As Mel was saying before, some of these companies that build the infrastructure around AI, that's really what ARM's bull case is, especially in a market where smartphone sales are down and the chip market has been a little stagnant.
Yeah, Brianne, just go in there with the bear case a minute, because it's also got significant exposure to China. Is that going to be something that we're hearing more and more if the IPO landscape is international in its flavor?
I think it is something we're going to be hearing, and we've seen that China is a bigger part of ARM's business in the past year than it was previously. When you couple that with the fact that their sales are down 1% year over year, their net income is half of what it was the prior year, that's not the rosiest picture. That is the bear case for the stock. So the investors that are investing in ARM and believe that there's upside here are really hinging that on their ability to own the AI chip market the way that they have in the smartphone chip market.
Brianne, based on what's happened so far in 2023, the few listings we have had, a quick serve restaurant, a dollar store, okay, call those growth names if you want, but do you get the sense that everyone wants a big IPO? The market's like, come on, give us the big tech IPO.
I do. And I think, there's certainly the institutional interest, but you have to remember, too, that retail investors typically have had no access to invest in these companies that have been private for 10, 15 years. These are brands and businesses that they know well. And until there's an IPO, that access isn't available. So I think in the broader market, there is a lot of demand for these IPOs just because, these tech companies are where a lot of the growth and innovation is happening. And while, platforms like EquityZen, we try to bring that access to more people, it's not until these companies go public that more investors can really participate in that growth. And I think there's a lot of demand for that, especially in a high rate market.
Yeah, and that was what caught our eye, SoFi underwriting, particularly when it comes to the Instacart listing, for example. And therein lies a desire for retail investors and companies to bring that access to retail investors. Is that going to be a big source of purchasing for names that at least we know and we understand, rather than B2B ARM, a B2C like an Instacart?
I think Instacart really is one of those blockbuster names that checks all the boxes in terms of growth, profitability, and as you're saying, a brand and business model that investors across the spectrum understand. As a consumer brand, a lot of these potential investors use Instacart. They do their grocery shopping via Instacart, and I think there's a brand loyalty value there, which will also bolster investor interest.
Interesting, as they're trying to very much talk up their B2B kind of the business right now to bolster their growth story. Brianne, it's great to have some time with you. Thank you so much, Brianne Lynch of EquityZen. Meanwhile, coming up, look, we've got to talk about how former Google CEO Eric Schmidt is using his $27 billion fortune to power none other than AI influence in particular. More next, this is Bloomberg Technology.
It seems more and more high-stakes decisions are ending up in my hands. Aon's advanced analytics and expert insights put things in the right context. It's the gut check I need to stay on top of it all. Better decisions. Aon.
Time for Talking Tech. First up, SpaceX has been ordered by the FAA to make fixes after its Starship rocket blew up. The FAA blamed multiple root causes of the flawed test launch and said the company needs to redesign its hardware to prevent leaks and fires. Plus, China's Ant Group has unveiled an artificial intelligence tool to use for wealth management and insurance services. The fintech company will use its financial LLM to power two applications which answers questions for customers and acts as an assistant for financial professionals. And some lawmakers are acting to curb the power of AI robot bosses in the workplace. This comes as companies rely on automated AI tools to measure workers' productivity and, in some instances, fire them if they don't meet performance thresholds. Caroline.
That future is coming thick and fast. Meanwhile, Ed, let's talk about AI a little bit more, but from the lens of who's powerful in it. Google's former CEO, Eric Schmidt, is one of them. Look, we know he's not been shy about his wealth. He's also not shy about his power. He's been leveraging his wealth, that $27 billion fortune, to actually build a pretty powerful influence machine that's allowed him to shape public policy. And sometimes some wonder whether it benefits industries in which he's deeply invested, like AI. We're going to bring in now Bloomberg's Anna Edgerton, who joins us more on really a deep dive in this. It's a fascinating read. And should we be surprised of overall Eric Schmidt's political influence? I mean, he was on the 2008 Obama campaign. He's someone who's always been deeply within technology, but also not afraid to lobby.
Yeah, that's a really good point. I mean, he has been a big presence here in Washington across 3 different presidential administrations. I mean, he was the chairman of the National Security Commission on AI, so clearly a very influential person. But what's different about this moment, this is when lawmakers are trying to not just regulate AI, but even understand what this technology is. And so whoever is trying to teach them that, as we will see next week when Eric Schmidt will join other tech CEOs and civil society people in the same room to explain to senators what AI is, much less how to regulate it. So this is a moment where this kind of influence machine that Schmidt has built over the years can really have an influence on this hugely important technology.
And pick apart some of that machine for us, because there's think tanks, for example, the Special Competitive Studies Project, there's the revolving door, there's what is there that he currently leads, and what undue influence does it have?
Yeah, just a few examples, and this is by no means a comprehensive list, but Schmidt himself has testified before Congress. He's been on these commissions, as we said, but he also has Schmidt Futures, which is an initiative to support scientists and entrepreneurs. Many of them go on to work in government, including the White House Office of Science and Technology. There's also his foundation that does its own philanthropic work, but is able to kind of further his worldview through that. And there's also the Special Competitive Studies Project, which is a think tank he founded basically to privatize his National Security Commission to kind of further his view of what AI is and what it should be.
And a final question here, and as a case study, what are you hearing in the halls of DC? I think Chuck Schumer spoke to us for this story.
He did. We hear that people very much appreciate Eric Schmidt's influence. They appreciate his contributions, but there are others who are worried about kind of his financial interests. And I did also, as we talk about this story, want to recognize our colleague Blake Schmidt, who worked with me on this story over the summer as he was battling cancer, and he passed away yesterday. So I appreciate his companionship, his collegiality, and his friendship, and he'll be greatly missed.
Bloomberg's Anna Edgerton, our thoughts here at Bloomberg Technology, also with Blake's family. Thank you for yours and his reporting. This is Bloomberg Technology.
It seems more and more high-stakes decisions are ending up in my hands. While still at the challenge, I worry some decisions might not get the attention they deserve. Working with Aon means I've got their whole team in my corner, with advanced analytics and expert insights that put things in the right context. It's the gut check I need to stay on top of it all. Better decisions. Aon.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Caroline, I'm going to look at the markets, but I look at it from the point of view of what a week it's been. So the NASDAQ 100 down 1% on the week, actually snapping 2 straight weeks of gains. But a big part of this story is Apple, right? Apple has just had its worst week since early August or in a month. And from a points perspective, at least, a big part of that 1% loss on the NASDAQ 100 this week is from Apple and all of the heavy news flow. In terms of the specific names we're watching, what's playing out this Friday kind of reflects the broad spectrum of news that's out there. It's tied to smartphones and China's, but there's so much nuance within it. So Apple's rebounding this Friday, having shed almost $2 billion from its market cap in Wednesday and Thursday's session. Xiaomi softer by 0.5 percentage point. Remember, buried in all the chaos was the idea that if Huawei did well in China with its own domestically focused handset, it would be at Xiaomi's expense. It has seen declines. And then actually, interesting, you brought this up yesterday, actually. Other names with kind of China exposure have seen downward pressure. Remember, NVIDIA confirmed at the last earnings 20 to 25% of data center sales still come from China. They're worried long term. Let's get back to what's going on in that smartphone market. Just days after debuting the new Mate 60 Pro smartphone, Huawei announced an even more powerful phone in the lineup, the Mate 60 Pro Plus. Now the US government has officially begun this probe into the chips used in those devices. But what does it tell us about China standing on its own 2 feet, technologically speaking? Bloomberg Technology Executive Editor Tom Giles joins us now. And Tom, for me, that's the question. What are they able to do on their own, irrespective of how the West responds to it?
Yeah, I mean, this is the billion-dollar question, right, Ed? Because what the United States has been doing for years now is really trying to cripple China in its ability to create its own chip capabilities, its chip-making capabilities. Chips, as you know, are the engine. They are what make these electronics run. And a lot of the vital components come from the U.S. And so the United States has gone to great lengths over the last several years to bar any of these high-tech these high-tech capabilities that come from the U.S. from landing in these devices in China. Gone to great lengths to do that. And what they're finding now is that as they look inside these devices, the United States wants to figure out, is China using U.S. capabilities through its own supply chain? That's the big question that they're trying to get answered right now.
So the small yard, high fence theory of blockading doesn't seem to have worked in this particular circumstance. Perhaps we've got to get into the nitty-gritty. Yep. But whatever the case, if we are seeing a capability of China to make these sorts of in-house, made-in-China chips, what next? What then? How much does that affect the overall tit-for-tat that's been happening, geopolitically speaking?
Yeah, absolutely. It shows that China's very much, when it comes to chip making, China is in catch-up mode. And the theory had been for many years that it's going to take them a long time. You know, building these fabs takes years, takes billions of dollars. And other parts of the world are so far ahead that theoretically it will still take China years. But what this suggests is that SMIC, in particular, this one particular Chinese chip maker whose equipment they have found inside the Huawei device is doing better than people had thought. You know, getting that chip down to 7 nanometers without getting into technicalities, the smaller, generally speaking, the better. And that's pretty tiny. And it shows that they have some capabilities that theoretically it was going to take them longer to develop.
Throughout the period, for months now, we've seen various think tanks really try to highlight that, well, China's further ahead than many might expect. Tom Giles, we thank you for breaking all of that nuance down. But let's think about the implications for Apple in particular. We're pleased to welcome Forrester Research Principal Analyst Julie Ast, because all of this comes with such timing. Because not only was it all unveiled by Huawei rather subtly while Gina Raimondo, the Commerce Secretary, was in China, but also ahead of Apple's big unveil. Yes. So does it suck out any of the oxygen in the room when it comes to Apple's lineup that we're about to be getting?
I don't think so. I mean, certainly the Chinese market is very important to Apple. It's almost 20% of their sales. The emerging markets like India and China are very important to Apple as we look forward. But next week is still going to be an exciting time.
Overall, in terms of the new phones we're getting, the AirPods, we want to dig into that in a little bit moment. But I know the precise specifics around China and India are not always your forte, but to the extent that we're worried about supply chain impact, or indeed just more broadly a pushback of not just government users, but actually just consumers in China. We've seen it before in 2019 and Apple weathered it. So is it that much of a worry?
Well, You know, it's hard to say what the future is going to bring, so I think it's always going to be a worry, but it's also hard given the amount of Apple supply chain that's based in China. It's really hard to untangle those. Like Apple's a large it's a large employer in China. It's got a very big base of business, and there's a lot that Apple does to help the Chinese economy as well. So I think it's going to be something to watch and see how much of an impact it has and what happens over the long term as well.
Julie, it's really hard to tie all these stories together, but next week we get iPhone 15. A 15, a 15 Plus, a Pro, and a Pro Max is what we've reported at Bloomberg. What does Forrester know about the Chinese consumer? If we get the tech upgrades we think on that handset, is that something that the market in China traditionally responds to?
So the answer is yes, and I think there's a couple parts of the answer to this question. So when Apple unveils its phones next week, we do expect it's going to be the best hardware that's on the market. It's going to have new camera features. It's going, but what consumers focus on, right, is the camera, the size, the quality of the screen, right? Because a lot of what we do with our phones is consume media. We watch TV, we listen to music, we read the news and do more things like that. And we also take a lot of pictures and post on social media and share with our friends. So those are the things that consumers will be focused on. And yes, we do expect Apple to leapfrog the existing competition that's in the market. The other side of the story, though, is, Apple's got an entire ecosystem of services and media and health and payments built around their devices. So there's a portion of the value that you get derived from just owning the smartphone, but there's so much more to the Apple's value proposition to an individual consumer than just the hardware itself. And there is no one in the Android ecosystem that's been able to rival that to date.
Well, let's go to some of the specifics then. Shout out Bloomberg's Mark Gurman, who has the Everything Apple plans to announce at September 12 iPhone event story out this morning. For me, I'm super interested in the latest processor, A17 3 nanometer, but it sounds like you're also focused on design. We know about these titanium sides, the refined and expanded bezels. What do you think is most important?
Yeah, so I think for the consumer, certainly, I think it's hard to put, or it's hard to articulate what it's like with the look and the feel and when somebody has it in their hands. But that's one of the things that Apple has always done well, is when somebody touches that device and they have it in the hands for the first time, it has an unbelievable wow factor. But if I go back to what you said earlier just about the chips too, the other advantage that Apple has is it has such a vertically integrated stack in their devices that everything is like fast. It's contextually relevant, things run smoothly, and there's so much that they do that, like I said, it's hard to articulate, but people, whether it's just the hardware or even how their applications are working, people just have a wow factor when they have one of those phones in their hands.
Apart from Siri, I'd say, to a large extent. And I think there's sort of been the void that Apple hasn't yet really stepped into, artificial intelligence.
Right.
Like, are we going to get any drip feed of really what's going on? Because they've been beefing up their team and they've been spending millions per day.
Yeah, so I think there's artificial intelligence, right? It has a lot of flavors, right? So there's like kind of the simple stuff that fills in the blank and does spell check and creates memory for us with our photos, and those things are fun. Certainly, I'd like to be able to tell Siri to call my husband and have that work. They don't know his name. So some of those things will happen. But then I think if you're talking about things like generative AI, I think we're going to wait a little while on that, right? I think there's probably too many risks associated with putting those applications directly in front of consumers yet, whether it's the mistakes that it makes or the hallucinations or the biases that are in it. I think we're going to wait on that for now.
All right, Forrester Research Principal Analyst Julie S., thank you so much. We're looking forward to taking B-Tech on the road to Cupertino next week. Now, coming up on today's program, we'll get all the details of the Y Combinator Summer 2023 batch with the CEO of Y Combinator, Gary Tan. He's here in SF, and that's coming up next. This is Bloomberg Technology.
It seems more and more high-stakes decisions are ending up in my hands. Aon's advanced analytics and expert insights put things in the right context. It's the gut check I need to stay on top of it all. Better decisions. Aon.
So it's been a really big week for a new crop of startups and founders here in San Francisco. In the last 24 hours, around 230 of them pitched investors in a demo day as part of the latest Summer Class 2023 at Y Combinator, the accelerator. The aim, go through the process for a few months, get your startup on the map, and then raise some money. And delighted to say that Y Combinator CEO Gary Tan is fresh here in the studio in San Francisco. Those days are important. Basically, you put those 230 or so founders in front of investors, having had weeks of training and mentorship, so they can raise money. How did it go?
Oh, it went great. There are thousands of people logged in to demo day, and it's still online, but the batch itself was 100% in person, and the feeling was electric.
We're going to ask about the benefit of that. There's something I want to clarify with you, Gary Tan. So when you were on the show last time in June, 35% of those you selected were pure play AI, and about 50% AI adjacent. Absolutely. But if I do the math, more of them appear to have become sort of AI associated. What does that reflect?
I think that's where a lot of the crazy opportunity is fundamentally. It's basically a brand new paradigm of computing where the computers can actually reason now. And that means literally a brand new wave, a brand new revolution. And these are companies now that realize that during the batch, they can close contracts for tens or hundreds of thousands of dollars with Fortune 1000s because the demos are that good. And if you can do that, that is the greatest rocket booster you could have for 2 or 3 people who are really great software engineers who can build fantastic AI software.
Gary, what about the rocket booster that is San Francisco? You bring international founders, you bring advisors internationally. I'm just looking at a UK pinup, Tom Blomfield, coming in as one of your newest group partners. But very much it feels like San Francisco is back on this map because of artificial intelligence. Is that real? Is that something that narrative media has grabbed hold of? Why come to SF to build your AI Y Combinator?
Well, at Y Combinator, we really believe that there are true agglomeration effects around having people right next to you, right down the street. The thing about YC is that about 5% or more of the companies that we fund go on to be worth $1 billion or more. And the secret there is 2 things. One is obviously we're a 12-week program that speeds people up, but for the life of the company, there are literally 4,000 other companies that we funded over the last 18 years, and they all help each other. And some crazy percentage, about a third of them, all end up in San Francisco or in the San Francisco Bay Area. And if you look at the capital effects, it's still the best venture capitalists in the world. They're focused on the Bay Area. And I think that is just going to continue to be true. And even if companies aren't in the Bay Area, every single CEO that you could think of will make a run through Sand Hill and San Francisco to raise money.
The one thing that San Francisco arguably lacks is diversity. And I know it's something that's close to your heart, Gary, and I look at some of the numbers here. 16% Asian demographics in terms of 2023 batch, but only 2% black when the population in America is far more than 2%, 13%, 3% Hispanic or Latino, and there's about 10% of the founders are women. How are you trying to increase that ultimately in a fairer manner?
Well, YC is going to continue to do more outreach and more efforts for diversity. It's really important at the end of the day to have representation at sort of all the levels. And so, we know that there's a lot of work to continue to do there, and that's why we release those numbers. And I think that we play an important part in that.
Gary, there are many notable names that started with YC and have gone on to be publicly traded or very high valuation growth private companies. But of the 229 you funded, realistically, how many will go on to survive? What is that kind of attrition rate?
Well, so the wild thing that I've been spending time looking at the numbers, and it turns out about 55% of companies that went through the program back in 2016 actually went on to raise a Series A. And so that number for people in venture capital and in startups is actually pretty remarkable. And then the more remarkable stat I found was that about a quarter of those raised at year 5 or later. And so this runs exactly counter to the narrative that is out there for startups, where a lot of investors are basically focused on trying to find the shot out of a cannon. They call it the blue flame. And I think that sort of runs counter to what I really believe, which is finding really great builders and then giving them the tools to succeed. It takes a long time. It's the 10-year overnight success.
There are many ways that a venture capitalist can exit an investment, a listing or a merger or an acquisition. The IPO market seems to be hotting up. You have many investments that you were the very first investor in by virtue of the accelerator. Just give me your view on this IPO market that seems around the corner.
Well, I guess I really underestimated the past sort of 3 or 4 years to what degree our markets are, in the end, influenced by interest rates. And so, if anything, that makes me more and more glad that I'm way at the beginning of it. I think of the public markets being connected to the early stage markets sort of by a rope. And, this might be up, this might be down, but on the flip side, new innovation is completely disconnected to the decisions that the Fed is making. And that's very much a good thing for us, I think.
There's plenty that affects these public markets. In particular, we're thinking of China and the exposure there as well, Gary. What's interesting is that there's one name that's very associated with the US, and it's Instacart. And I know that's something that you wrote early check into, been an advisor to. How much are you seeing at the moment this optimism come back, that companies, even though they might have to swallow a bitter pill of valuations not being where they were in 2021, but ultimately being able to stand on their own 2 feet, become public, and have a great growth story?
I think that was one of the really big lessons for startups broadly, and I'm hearing it in my office hours at Y Combinator pretty regularly. There was this wrong idea that sort of permeated Silicon Valley and venture-funded startups, where you wanted to sort of show metrics to raise the next round. And a lot of people forgot, hey, profitability, gross margin, and ultimately net cash flow. That's what ultimately really, really matters. And actually, it's incredibly healthy that Instacart has that story. So many more that are going to IPO have that story. And it's a return to basics, not just at YC, but for all of tech.
Back to maths. We thank you so much for spending some time with us after what has been a very busy time over at Y Combinator. It's CEO Gary Tan. Great to have you in the house. Thank you. From New York and, of course, from San Francisco, this is Bloomberg Technology.
Today is looking deeper at our ESG plans, then putting out a supply chain fire, then getting a last-minute briefing on cybersecurity. My priorities don't just shift, they shift by the hour. That's where I need Aon. Their combination of advanced analytics and expert insight keeps me up to speed and ready for my next move. Better decisions. Aon.
Now, you're probably waiting with bated breath for Apple's reveal. It's coming of the iPhone 15 as soon as next week. You don't need to wait with bated breath because we've got all the information for you from one Mark Gurman. He always gets the scoops ahead of it. He's, of course, looking ahead to the Wanderlust event. Just how wonderful is this going to be, Mark?
Well, if you're in the market for a new iPhone, Apple Watch, or AirPods, it's going to be pretty wonderful. They're going to be rolling out 4 new iPhone models as they've done the last few years. This is going to be a very significant launch for them. This is the first so-called iPhone redesign in 3 generations. So the iPhone 15 Pro and Pro Max will be redesigned with titanium, new cameras, a new overall shape, a new charger. So that's significant. The Apple Watch, if you bought last year's Apple Watches or even the ones from the year before, there's probably no reason to upgrade, but they will be getting a performance boost. And they're also going to start bringing USB-C, which is the new charging standard they're moving to on the iPhone and their other products because of the European Union, to the AirPods.
There's a lot of detail in your preview out this morning, Mark. I want to go to kind of the tech side first. A17 processor and in the Pro models. and then the U2 on the RF side across the 4 new iPhone 15s. How does that improve them?
Yeah, so they're continuing the strategy that they actually started a year ago, where they're differentiating which chips are in which iPhones. So if you want the fastest new chip technology, you have to get the higher end iPhones. The iPhone 15 and 15 Plus, the 2 baseline phones, are going to be getting last year's Pro chip. So only the pros will get this A17 chip. And there is a focus there on both performance, but also efficiency for battery life. Now, this new U2 chip, this is their second generation ultra wideband chip. This is a bit of a surprise because they have not put in a new ultra wideband chip into its product since 2019 with the iPhone 11 Pro. Now, this chip is all about accuracy. So being able to find your devices more quickly, but also to more accurately locate people on the map in the Find My app. So this is a significant new chip. This is going to be found across all of Apple's major new products, and it's going to first roll out in these new iPhone models as well as the new Apple Watches.
As long as it can make sure that I'm by the right lift bike at the right time, I'm pleased with that as well. Mark Gurman, absolutely brilliant. Ahead of the all-important September the 12th event that, of course, Ed Ludlow, you're going to be at. And, of course, as we head to break, this is the end of this week of Bloomberg Technology, but so much to be looking forward to next week. Just, are you going to be looking at the watch? Is it the software? Is it the hardware? I know you're going to be geeking out on the chips.
Yeah, look, we didn't even get to the updates coming to Watch or AirPods, but after the news flow of this week, iPhone is everything. What an astonishing news flow that's put that in focus.
Yeah, so right. Particularly what they say around, we know these things are pre-recorded, but what about China? What about the exposure there? This has just been an extraordinary time, particularly with the Huawei unveil. But for now, that does it for this edition of Bloomberg Technology.
Recap the week and the show on the podcast, wherever you get yours, Apple, Spotify, iHeart, and Bloomberg. From SF in New York, this is Bloomberg Technology.
Using AR does afford for a kind of subversive kind of conversation. And that to me is its real power.
The term emerging technologies can be vague, subjective, and misleading.
I agree with it 100%. We don't always think about the entire picture and the ways in which all of these things are interconnected.
Hyundai Motor, connecting art and technology.
You're watching Daybreak Asia, coming to you live from New York, Sydney, and Hong Kong.
We're counting down to Asia's major market opens.
The top stories this hour. Asia stocks are set for a positive open ahead of economic data that could shape the Fed's rate decision. Tesla driving Wall Street gains as Morgan Stanley raises its price target to $400. Qualcomm also jumping after Apple extends the semiconductor deal in a sign that the iPhone maker's own chips are taking longer than expected. Plus, we get a gauge of China's consumer recovery, speaking exclusively with Accor's Greater China CEO, Gary Rosen.
Take a look at how U.S. futures are trading early in the Asian session. We're seeing a little bit of pressure after U.S. stocks gained ground in the New York session. The S&P 500 trading around that 4,500 level in the regular session. We had the Nasdaq 100 seeing its best day in about 2 weeks or so. We had Tesla rallying on that Morgan Stanley upgrade. We also had Qualcomm gaining ground with Apple extending its agreement with the chip maker. We're watching treasuries, minimal action in that sector with treasuries ending pretty mixed. The 10-year yield just a touch below that 430 level. Of course, we're still awaiting that monthly CPI data this Wednesday for more clarity on where the Federal Reserve goes from here. Oil at the moment holding steady. We actually saw a little bit of pressure in the New York session. Technicals looking a little bit stretched at the moment, Belle.
Yeah, well, Sherry, really, when you take a look at what we've got for the Asian setup today, it is going to be taking some cues from what happened in the Wall Street session, particularly those moves around tech stocks in particular. We do have futures pointing high here across the board. And Nikkei futures, that's not the most liquid of contracts in Chicago, but we're still keeping an eye on the Topix Banks Index. Again, perhaps a little bit more low volume, but indicating to us investors are going to continue to be buying into those bank stocks. There's a lot of anticipation building in the market ahead now of the BOJ meeting next week. Whether we're going to see any sort of changes around the yield curve control program, whether we could start to see an exit or more signaling around the possible exit from negative rates. So that's the state of play as we head into the session today. The focus, though, still on what's happening in the currencies market. If you change on now, keeping an eye on what's happening with the dollar yen. It's trading fairly steady in the early hours this morning, but still we are keeping a very close watch on that gap here between the Fed and the BOJ, because this chart here really taking a look at how the dollar yen has sort of been held hostage to what goes on with the Fed rates, and so that's why the inflation print tomorrow, Heidi, still very much a focus. Will the price pressures be hot enough to have more anticipation that we're going to see the Fed hiking again perhaps later this year? That's something else that would, of course, keep us on watch for any further sort of signalling around intervention from Japanese government officials.
Yeah, that's going to be key, right? That divergence story, what we get from the Fed. Let's get more with Anthony Doyle, who's the head of investment strategy at Firetrail Investments, here with me in Sydney as always. Anthony, great to have you with us. There's such a risk, isn't it, for investors to be second guessing or, planting so much of their expectations on one single piece of data and how that could impact Fed policy?
You know what? It's really been the story of the last 24 months. So even in 2022, 10 out of the 12 most trading days were CPI prints. And it goes to show the sensitivity that the market has to Fed policy reaction at the moment. So if we do see potentially a more sticky inflation number than the 0.6 expected by economists or 0.2 on core, I would expect to see the bond market start to potentially price in another rate hike before the end of the year, potentially as early as November.
So we may not have peaked when it comes to yields?
Now, from a fundamental standpoint, we believe that the central bank, the US Federal Reserve, has probably afforded itself enough time to approach that wait and see mode. So we probably won't see another rate hike, but much will depend upon the incoming data. And of course, that will have ramifications for the yield curve, including the long bond yield.
Anthony, what are you expecting for the CPI numbers here in the U.S. on Wednesday, and do you position ahead of that?
I mean, as fundamental, high conviction, concentrated investors, we don't pay too much attention to the noise of month-on-month data prints that can be, highly volatile. So we aren't positioned in any particular way in terms of the reading on Wednesday. But what we are doing is taking a fundamental standpoint with that 3-year view and looking outside of those mega cap names that have really driven market returns this year. We're seeing really great opportunities in the mid to small cap part of the market today. And this is where we're really looking, those companies that have pricing power, that can afford to pass on rising labour costs or even rising input costs to the end consumer.
Anthony, talk us through what's happening in the EM complex, especially when it comes to that focus on China, because I see that you do have an overweight on EMs, but at the same time, you're not necessarily exposed to Chinese stocks. We have seen traders really pulling out so much money on those emerging market ETFs that are exposed to China and putting them elsewhere where they don't have exposure in China. Do you see this trend continue given the concerns over the economy there?
So our portfolio currently has zero exposure to China, and I think it is right to be cautious. Certainly in terms of the incoming economic data, it does suggest a slowdown in China, and I think that given those concerns that many fundamental investors have around Chinese companies at this point in the global economic cycle, if you're a high conviction investor, then there are simply better opportunities elsewhere. And the opportunities that we're finding are across a range of EM economies, including Banco Itaú in Brazil. We own a couple of Mexican infrastructure plays via Mexican airport exposures. We own an Indonesian bank, BTPN, for example. We also have exposure to higher copper prices via Canadian-listed First Quantum, a copper miner with assets in Panama and Zambia. So from a bottom-up perspective, we think there are better opportunities within the global equity market outside of China, which at this moment looks like a binary investment in terms of which way they could potentially go.
But if you're underweight Asia Pacific on equities, what do you like? Is that company specific, as you said, some calls in Indonesia, some other calls in terms of commodities as well?
Sherry, it's really from a valuation perspective. So the underweight that we have in the portfolio to Asia Pacific is offset from an overweight in US and Europe in particular, where we see valuations are particularly compelling, particularly on our investment time horizon of a 3 to 5 year view. So we both own large caps, we own mega caps, including Alphabet and Microsoft. We own large caps in Europe, including Schneider Electric and Air Liquide. And we also own some smaller names, including Tenable Holdings, for example, listed on the NASDAQ in the US.
Is there anything appealing about having either China exposure or indirect China exposure? What would you want to see to make that a little bit more palatable?
Yeah, so the philosophy that we follow are really sustainable earnings and sustainable business models for my portfolio.
Is the issue for you?
Exactly. It's too difficult for us to really get a good understanding of the outlook on that 3 to 5 year view of what the earnings trajectory is for a number of these companies, particularly given the changes that seem to be hitting headlines every week from the Chinese policymakers in terms of trying to support the respective sectors within the Chinese economy.
Yeah, we were speaking to Carl Bass earlier talking about this, Xi Jinping-induced volatility, right, for investors that have that exposure. Anthony, always great to speak with you. Anthony Doyle, Head of Investment Strategy at Firetrail Investments. Still ahead, Accor Greater China CEO Gary Rosen will be along with us, exclusively telling us where they're seeing room for growth in the mainland's hospitality sector despite signs of a struggling recovery. This is Bloomberg.
The odds have shifted to the yen's favor at the start of the week, but it may still be vulnerable to sharp movements. This as the U.S. CPI print and central bank meetings loom large in markets. Let's discuss our Japan-Korea economy and government editor Paul Jackson. Paul, will we see this curveball coming from the U.S. CPI numbers?
Well, we could do. Obviously, we're going to be looking at the market reaction. We are expecting a speeding up of the headline figure, but also a slowing down of the core figure. So there's going to be lots of moving parts on Wednesday, and we'll be looking at how the market reacts to it. I guess the main point we want to make here is that while the yen has managed to strengthen, rally on those BOJ Governor Ueda comments at the weekend, we're still not out of the danger zone of intervention. We can't rule out that possibility. Sharp moves in the yen are still possible, and we've got plenty of catalysts coming ahead. We've got ECB, Fed meeting, BOJ next week as well. But our first catalyst looming large ahead of us is this US CPI print.
Paul, what do you make of the market reaction across JGBs, across the yen, broader kind of sentiment when it comes to Ueda's comments? Were they taken a little bit too far, do you think, or has that really significantly reset expectations of policy change soon?
Well, I think it will have reset expectations in terms of putting the bumping up of the short-term interest rate, getting rid of negative interest rates. It's brought that on the radar for a lot more people in terms of the time frame. In that interview with Japanese local media, Ueda said he could have enough information on wages and inflation by the end of the year. So I think we're going to see some economists bringing forward their forecasts for policy change into the first quarter or second quarter of next year. And the prospect of the end of the last major negative interest rate in the world ending is starting to come clearer. But one point that I think we also need to make is that on the yield target, there is still a yield target of 0. Although we have this kind of effective upper limit of 1%, the target is still 0. So you can't have a negative interest rate removed up to 0 and still have your long-term rate at 0. Be flat across the line. So obviously there are some decisions still to be made on YCC, which would have to be made before or at the same time as raising that negative interest rate.
Bloomberg's Japan, Korea economy and government editor Paul Jackson there with the latest. And we're also watching Qualcomm shares surging after Apple extended a deal to get modem semiconductors from the chip giant. The move also signals that Apple's ambitious effort to design chips in-house is taking longer than expected. Bloomberg Intelligence believes a contract extension could result in significant upside to Qualcomm's sales estimates. Our senior semiconductor analyst Kunjan Sobhani joins us now for more. So Kunjan, let's take a look at the Qualcomm side. What is it kind of, I should say the Apple side in terms of what it's implying, right? The complexity of being able to bring this sort of technology and design in-house.
Yeah, I mean, look, developing a 5G modem chip is a very complex process with multiple hurdles to clear. First, you need a working solution that needs to work globally across different regions, different spectrums, different bands of 3G, 4G, 5G, and then you have to qualify them across various service providers globally across different jurisdictions. This is step one to having a working solution. After that, Apple needs to have a solution which at least matches Qualcomm in performance, if not better. It wouldn't be ideal for Apple to have their flagship iPhone shipping with a subpar cellular connectivity chip, while other Android OEMs like Samsung are shipping with a better Qualcomm solution. So there's multiple hurdles when it comes to complexity of developing a solution.
What is the impact on Qualcomm revenues and estimates?
Yeah, so we estimate an addition of about 5 billion to 7 billion to top line sales coming fiscal 25, because this is when analysts were assuming that Apple would have its own solution and drop Qualcomm. So that's a pretty significant addition to its top line.
So knowing what we do now, how do we think Apple will kind of phase in these solutions when they're ready?
I think from our perspective, we believe they'll phase in sort of the lower priority devices like the wearables, the watch, the iPads, the Macs, and rather replace the premium flagship iPhones. It's where they'll drop Qualcomm the last, because they would want to see and try in the field with across multiple volume devices to see how their solution works.
So what else do we know about the licensing agreement extension?
Yeah, so their original licensing agreement was supposed to expire by March of 2025, and there is an option for another 2-year of extension. So I think that covers this entire part of where the chip is now agreement is also supposed to last in 2026. But the chip agreement and the license agreement are separate. So even if, let's say, Apple was able to design their own chips earlier, they would still be under the licensing agreement with Qualcomm.
Bloomberg Intelligence senior semiconductor analyst Kunjan Sobhani joining us from San Francisco. And you can get a roundup of all of these stories that you need to know to get your day going in today's edition of Daybreak. Terminal subscribers go to DayBgo, also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get the news on the industries and the assets that you care about. This is Bloomberg.
Roller coaster prices, supply chain glitches, political unease. They do their best to wreck my business plans. With so many unknowns, how do I know I'm making the right decisions? Aon helps me stay on top of things. They have expert points of view on volatility from around the world, paired with local insight that helps me get back on solid ground. Better decisions. Aon.
JP Morgan CEO Jamie Dimon is again taking aim at higher capital requirements that US regulators have proposed for banks. Dimon says he would love to know what they really want to accomplish, adding that the plan would be a huge negative for American banks over time. He also questioned whether regulators have learnt the right lessons from this year's regional bank failures.
The Federal Reserves have a little humility. They're the ones that told the world rates aren't going up. And it wasn't the Federal Reserve in general, it was each one of them independently. In fact, it was each central bank. So if I were them, I'd have a little more humility over stuff like this.
Still on banks, Bloomberg has learned that UBS is cutting hundreds of Asia wealth management jobs just months after completing its takeover of Credit Suisse. Bloomberg's Vonnie Quinn has more on this. And Vonnie, the Asia wealth teams were supposed to be safe from cuts. What happened?
This is what we heard when the merger finalized back in June, right? That the wealth teams, especially in the Asia Pac region, would be okay, that that's not where the bulk of the cuts was going to come. Unfortunately, as we know, these things don't always pan out the way that they are initially planned, and particularly given the slowing economy in China, which was a little bit of a surprise post-COVID that it didn't bounce back quite to the extent that we were expecting, and muted client activity. It seems now like those wealth management jobs are getting hit. Now, the better news is that it's not hundreds and hundreds and hundreds. The source that we're talking to is telling us that it could be as low as the low 100s. It'll happen between now and the end of November, and it'll be mostly concentrated in an area where the two banks together have now created a behemoth with more than 1,400 of these wealth management and client relationship jobs. They had more together than both their rivals combined, DBS and also HSBC, so it sort of makes sense for UBS now to cut some of these jobs. And luckily, it's not, you know, an entire flood of jobs. It's in the low hundreds.
Do we have any more details about where they would hit?
Yes, we know that for the most part it's going to be Hong Kong and Singapore, perhaps as you might expect, because that's where the concentration of jobs are. But obviously there is jobs across the region, and we're hearing that in Australia and India jobs are safe for now. But of course everything is for now, everything is conditional, right? We know, for example, that way back when the merger was completed, Iqbal Khan, who was UBS's global wealth boss, he actually hosted celebratory events in Hong Kong and Singapore, riling up the team and sort of suggesting that they would literally own the region in terms of wealth management. Well, of course, that hasn't come to pass. And it should be noted that bankers who've been in this for a while sort of saw this coming. We have seen a trickle of senior bankers in these units leave, even ones that were hired recently. So it's obviously been visible within the bank that some of these jobs were going to go. And we know that domestically in the United States and in Europe, UBS has also said that it's getting rid of at least 3,000. And some of those are jobs that are sort of the same job, right? The so-called synergies that we always look for when two of the same titans in an industry merge.
Bloomberg's Vonnie Quinn there with the latest. We're also tracking some other corporate stories at the moment, including Oracle, where those shares have slumped in extended trading after a slowdown in quarterly cloud sales growth. That unit's revenue jumped 30% to $4.6 billion. That was down from the previous quarter's 54% surge. Oracle is focused on expanding its cloud infrastructure business to more forcefully compete with the likes of Amazon, Microsoft and Alphabet. Tesla shares jumped over 10% after Morgan Stanley upgraded its weighting for the EV maker. It's now rated overweight from equal weight with a price target of $400. That's the highest on Wall Street. Morgan Stanley believes Tesla's Dojo supercomputer for its automated driving systems could add some $500 billion to its enterprise value. Charter Communications is set to offer Disney's flagship streaming service at no additional cost to its cable TV subscribers. The nation's second-largest cable provider will include Disney Plus in its $60 a month Spectrum TV Select offering. Sources say Charter will pay Disney a wholesale price for the service. Instacart and its backers have set the stage for an IPO that may value the grocery delivery business at as much as $9.3 billion. The expected valuation is a significant decline from its last fundraising round in 2021. Let's get more from Abigail Doolittle.
The IPO window is
open, and one well-known name, Instacart, is considering pricing its listing on Tuesday, September 19th through NASDAQ, but at a significant discount to what it might have fetched back in the pandemic heyday. Instacart and its backers have slashed its valuation to about $9.3 billion, about a quarter of what it was worth in the pandemic. This will, however, allow the largest grocery delivery company to raise about $616 million by offering 14.1 million new shares for $26 to $28 each. Existing shareholders are selling 7.9 million shares at the same price wherever it is determined to land. Now, the $9.3 billion valuation, it isn't finalized, and it could still move higher based on investor demand, but it is a tremendous and noticeable drop from the pandemic height valuation in 2021 of about $39 billion. At that time, there, of course, were versions of lockdowns and difficulties for people to shop in stores. That same year, the company did replace its CEO. Now, in conjunction with the IPO, PepsiCo is buying $175 million of its preferred convertible stock, another source of funding. From a broader perspective, Instacart's listing could help unstick the backlog of companies whose plans to go public have been stymied by the longest lull in U.S. listings since the financial crisis all the way back in 2009. In New York, Abigail Doolittle, Bloomberg News.
We are looking like a pretty mixed start to trading in just about half an hour's time when the cash session begins in Australia. For a start, we're seeing Sydney stocks marginally higher, just about 0.1% higher. Though we do see Wall Street kind of rising ahead of course, that key US CPI print expected to show just how close the Fed is when it comes to wrapping up this tightening cycle. We're seeing futures trading in Japan looking pretty flat at the moment. New Zealand managing to eke out just about 0.1% when it comes to a gain. Watching for some of these chip stocks and tech in particular after we saw Tesla rallying 10% after that upgraded assessment from Morgan Stanley on its Dojo supercomputer. Also watching some of these Qualcomm adjacent stocks as well after we saw that climb. Apple still with the chip maker there as well. S&P futures looking a little bit softer at this point, down about 0.1%, Sherry.
Take a look at how currencies are trading at the moment. Of course, we had seen the dollar retreating after that record streak of gains after we saw some Asian central banks coming into action. Of course, a PBOC giving that strong warning to speculators to steer clear of destabilizing the yuan, which is why we saw a little bit of strength for the offshore yuan right now trading at that 730 level. We had also heard from BOJ Governor Ueda taking a more subtle approach in hinting at the possibility of an eventual policy shift, but that also led the Japanese yen to see its best day in about 2 months, right now at that 146 level. The Aussie holding steady at the moment at 64 US cents. Up next, we speak exclusively to Accor's Greater China CEO Gary Rosen about spending appetite among Chinese travelers. This is Bloomberg.
My priorities don't just shift, they shift by the hour. That's why I need Aon. Their combination of advanced analytics and expertise helps keep me up to speed and ready for my next move. Better decisions. Aon.
Welcome back. China's latest economic data showing signs of stability as credit demand improves and deflationary pressures ease. The August numbers suggesting that July's grim figures may have reflected the worst of the slump when consumer prices tipped into deflation and monthly loans plunged to a 14-year low. Despite the weak consumer sentiment, domestic tourism has been seeing a strong rebound. Let's get more on the sector from our next guest, Gary Rosen, Greater China CEO at Accor. Gary, great to have you with us. When we look at the headline numbers out of China, we're still seeing pretty weak figures. What are you seeing on the ground?
It's interesting. There's certainly the sentiment is a bit cautious. There's no question. I think people are making choices that are a little bit reminiscent of going back into the savings mode. People are spending less on certain items, but what we've seen actually is coming out of COVID, people really have continued this pent-up demand for travel. And so that's really had an amazing effect for us in terms of the rebound. In the summer, we actually had record-breaking summer performance domestically, which was back to the level of 2019. And we see that now continuing as we transition from summer holidays into back to a corporate environment into September. So, I think one of the things people are doing are pulling back a little bit in terms of what they're spending on items. But travel is in curated experiences are something that people absolutely want to continue to do. And it's this opportunity to rediscover right now the domestic market holistically, which has been great. And it's been wonderful to see. Always remain cautiously optimistic, but certainly the impression is one of positive nature for certainly coming through the balance of the year.
So you're about to sign a record of about 125 hotel partnership projects across China this year.
That's
how
true.
Are you, How are you so confident about what's happening in China? And is it your asset light sort of model where there are joint operations and fully franchised, the reason that you're able to go more in depth and have all of these partnerships?
It's great. That's a great point. It's the combination, actually. Our approach really into China is we have our partners that we actually have master franchises with, and our brands such as Ibis Styles, and Mercure with our partner Huazhu. We have another master franchise with Sunmei for Movenpick, and also with Funyard for our lifestyle brand Joe and Joe. So we can grow through our master franchises, and then we're also growing organically with ourselves through our premium brands like Pullman and Swiss Hotel, through high-end luxury, which including Raffles, which I'm sitting in today, and we just opened our newest Raffles at Galaxy Macau in Macau. So I mean, it's a combination, and that combination, but I think most importantly, our approach to working with the large Chinese operators is what's actually allowing us to fuel our growth when you have those partnerships in place and those trusted partnerships in place.
Gary, you've talked about the curated experience. We're also seeing value becoming a much more important theme when it comes to a lot of Chinese households and consumers. Does that mean you've seen an impact? I'm curious when it comes to the higher end part of the portfolio, the Raffles, the Fairmont, the Sofitels.
Actually, no, that's really interesting. When people are thinking about their travel experiences, this is where actually they're very comfortable spending. And so they do want to still have that great experience. Our Raffles, we have 3 Raffles in Greater China. Macau has opened to a full house. Raffles Shenzhen, Raffles Hainan, both have been delivering great results. So we see that consumers still want that luxury, and yet, quite honestly, we're seeing a growth across all sectors, whether you go from mid-scale all the way up through high-end luxury. So it shows you the vast nature and the number of domestic consumers traveling, that it's actually able to fill all the different segments of hotels.
What's your expectation or outlook, I guess, when it comes to room rates? Because, historically they have been much lower in markets like mainland China. Is that unlikely to change given the economic outlook?
No, quite actually, it's interesting. Since the reopening, I should say, we've seen an increase in rates, and our rates are continuing to increase on a respectable level. You're absolutely right. Overall, hotel rates are generally lower in China than they are in other parts of the world. But as the demand continues to grow, so will rates. So we've actually seen a significant growth since reopening back in January.
What about Macau? How are you feeling towards the sort of revival of gaming in that market?
Actually, incredibly positive. Just walking through and coming across yesterday, the hotels are full. Certainly, the opening up, certainly from the Greater Bay Area, and just the ability to come into Macau. So Macau actually is well above 2019 in terms of its results right now, and we couldn't be more pleased about that. And that's a great sign to come. That's a great indicator that people are traveling, people want the experiences, and especially in Macau, where it's transitioned a lot from gaming, but also a huge amount of entertainment coming into the market as well. So, and there's a demand for it. So, you have your traditional gamers, but you actually have those people now that are seeking more experiential, more talented, or talent, I should say, concerts, etc. And that's driving also a different type of guest over to Macau as well.
Gary, We are seeing a lot of volatility in the currency space. We have seen incredible weakness in the yuan. How are you being impacted by the currency fluctuations that we continue to see?
Well, the interesting thing is currency is always going to fluctuate, whether you're talking about the RMB or you're talking about against the euro. You just have to factor that in. Forex is always going to be something to watch and to consider. But, from us, from a results standpoint, when you look at local currency, it's, the like for like is actually delivering strong results for this year so far. So again, that's what allows us to remain cautiously optimistic, since we're certainly still in this year of transition coming out of the last 3 years of COVID, moving forward. But again, as I mentioned, the interesting thing again, when we're talking about consumers' decisions about how they are spending, travel is one that they're actually not cutting back on.
Gary, great to chat with you. Appreciate your time. Gary Rosengrader, China CEO at Accor. All right, let's get you to Belle, who, speaking of FX, we are, you're taking a look at some of the moves that we've seen in dollar China.
Yeah, that's right, because you were just talking about the moves there and that weakness that we've continued to see in the Chinese yuan. But what was interesting in the session yesterday, we were all about the yen, but there was also a lot going on with the yuan, and combined these two currencies were really helping to drive or put pressure on the greenback here. But what really drove that? Well, there was a couple of different factors. One of that was Chinese officials coming in to say that they are concerned about one-way moves in the market. They will move to correct those as well. And so that was one of the factors that led to that jump that we can see here. The biggest one since March, so biggest intraday move in about 6 months for the currency. What else really boosted it along was economic data. So we had the aggregate financing numbers coming in better than expected, telling us perhaps there's a little bit of stabilization that's going on for mortgage demand in the China property market as well. So another supportive factor for the currency. Changing on now. We have seen a lot of stronger than expected fixes coming through from the PBOC when it sets that in the early part of the morning. And so that, again, came through yesterday, something else that helped to lift the yuan off the weak end of its trading band. So certainly, Sherry, a lot of focus on the Chinese yuan. We keep a close track on it, though a lot of economists out there saying that if we do see that aggregate, or rather the monthly activity data coming in on Friday, weaker than expected, that could be something to push the currency to 7.4 against the greenback. So certainly something to watch as well.
Yeah, and of course that will really have implications for oil prices as well. Currently holding at this year's height, we have seen a little bit consolidation recently given the 10% gain or so in recent weeks. Colombia state-run Ecopetrol is Latin America's third biggest oil company. Oil and coal account for about half of Colombia's exports. But now the country's leftist government is seeking to transition away from fossil fuels. I discussed the implications in an exclusive conversation with Ecopetrol CEO Ricardo Roa.
There
is a clear intention from the higher government not to hold rounds for those interested in searching for oil and gas resources, to bid on and acquire some regions and areas for oil and gas exploration. So, if they don't do that, we currently have a portfolio of 48 contracts in execution for oil and gas exploration. And we have also identified 8 additional contracts that have been suspended for various reasons, in which we can surely delve deeper and search for more oil and gas reserves for Colombia's energy system.
Are you focusing on accelerating investments into oil production or transitioning faster towards renewable energy?
Well, we will continue to maintain our exploration, production, and the production regimes we have today, fulfilling the value promise we have made to our shareholders and the market in our 2040 strategy. However, looking at the long-term horizon in the next 17 years, there will be a significant allocation of resources towards renewable energies. Currently, these low-emission businesses include natural gas and clean energies, represent around 20 to 22% of the most significant investments we have made recently.
Cuando se trata de Colombia, el petróleo y el carbón, oil and coal account for about 25% of foreign direct investment in Colombia. You've been speaking to investors here in New York. Is there a big divergence in what the government wants and business interests comerciales in Colombia?
No, yo creo que lo que estamos viendo permanentemente es
I believe that what we are continuously witnessing is a greater understanding between the government and private investment regarding the true, just, and equitable energy transition. This precisely implies the element that we've emphasized, which is the driver. The driver of the development of these projects is a capital discipline. It is a capital discipline that also entails that the energy transition does not happen at any time and at any price. We are emphasizing these three elements that underlie the decisions through which these projects have the possibility to develop over time.
la posibilidad de desarrollarse en el tiempo.
That was Sherry's exclusive conversation with the Ecopetro CEO Ricardo Rao. Much more to come here on Daybreak Asia. This is Bloomberg.
Roller coaster prices, supply chain glitches, political unease. Aon has expert points of view on volatility from around the world, paired with local insights that help me get back on solid ground. Better decisions. Aon.
Opportunity. People.
Things get done.
Before, I never did business in Georgia. I was amazed what kind of opportunities. There are many of them here.
Very little bureaucracy, simplicity of doing business.
You have access to markets, finance, and authorities.
It's perfectly located logistically. We have the biggest suppliers nearby.
EBRD has invested 4.6 billion euros in 270 projects, and I think that speaks for itself.
Georgia.
A pleasure
doing business.
A much criticised technology pioneered by fossil fuel companies could be central to Japan's net zero ambitions. Bloomberg New Energy Finance says the country could become a major carbon capture and storage market as more Japanese firms enter into such projects at home and abroad. Let's bring in the head of BNEF's Japan and South Korea research, David Kang. David, so how big a role do we see CCS playing in this net zero journey for Japan?
If we look at Japan's carbon emissions by sector, power and industry sectors account for around 60% of the total emissions, and CCS could play a key role in decarbonizing both of these sectors. Based on our modeling analysis, we actually see CCS abating up to 10% of Japan's cumulative emissions between now and 2050. And it plays a particularly important role in decarbonizing the steel and cement sectors. And that's because we expect the cost of green hydrogen, which is essentially a competing technology against CCS, to be more expensive than other parts of the world, largely due to the higher cost of renewable energy in Japan.
So how does the Japanese government then plan to scale its carbon capture and storage industry?
Japan's game plan is to scale the industry by focusing on 4 areas: setting ambitious capacity and cost reduction targets, providing project subsidies, establishing legal framework, and lastly, exploring international partnerships with countries like Australia and Indonesia. If we look at the near-term target, Japan aims to have 6 to 12 million tons of capture capacity by 2030. And this could be achieved if all 7 large-scale CCS projects that are currently under development are commissioned on time. But the government's 2050 target of 240 million tons of capacity, that's an 18-fold increase from the 2030 levels. And we think this will be quite challenging to achieve under the current level of support.
What would be required for Japan to be able to meet these ambitious targets?
First and foremost, the government will need to scale up public funding on CCS projects. So far, Japan provided around $270 million in subsidy, and that compares to $24 billion in the UK and $14 billion in the US. We'll also need to see Japan's carbon prices rise significantly to spur investments. The current price of just $2 per ton, that's not only too low, but Japan also exempts that tax for key industrial sectors like steel and cement, where CCS could actually play an important role. Last but not least, Japan could also benefit from developing large-scale CCS hubs. We estimate these hubs can reduce the transport and storage costs by up to 75% for economies of scale, and that could help Japan achieve these ambitious cost reduction targets as well.
Japan and Korea Head of Research at BNEF, David Kang. Thank you. We have more to come on Daybreak Asia. This is Bloomberg. UK Chancellor of the Exchequer Jeremy Hunt says the government is focused on fighting inflation with price pressures remaining high. Speaking to us exclusively after the G20 summit, he says the Treasury may not have extra headroom for tax cuts or other giveaways.
I think it's unlikely because since the spring budget, when the last numbers were published, we've seen inflation stickier than was forecast at the time, and that means debt interest payments are higher. But we don't have the numbers yet from the Office for Budget Responsibility, so this is speculation for you and me both. But our priority is to bring down inflation. And when you're trying to bring down inflation, you have to be really careful not to pump extra money into the economy, much as you would like to, not to pump extra money into people's pockets, because that can push up prices and keep inflation higher for longer. So the one thing I can absolutely say is that our focus at the autumn statement will be on bringing down inflation and delivering both the Prime Minister's goal to halve inflation and the Bank of England's target to get it down to 2%.
Of course, inflation has eased, but not as much as other countries, much slower, in fact, in terms of how the rate of it easing. Do you think the Bank of England has done a good job?
Well, I think, in fairness to the Bank of England, lots of central banks around the world underestimated the persistence of inflation. They were actually one of the first to raise interest rates when they did. And we brought inflation down from over 11% to 6.8%. So we are making progress. At the same time as which we've discovered that the UK has a GDP that is higher than pre-pandemic levels and has recovered better than any other major European country. So the economy has shown that it's resilient, but the long-term future for the economy depends on getting inflation down, and that's what we're focused on.
UK Chancellor of the Exchequer Jeremy Hunt there, speaking exclusively to Bloomberg's Haslinda Aman in New Delhi. Let's get a quick look at some of the top geopolitical stories that we're following this hour. Vietnam Airlines has signed an agreement to buy its first Boeing planes in a deal worth up to $10 billion. The airline currently only uses Airbus in its fleet. News of the order comes as President Biden visited Vietnam, also announcing deals in areas including semiconductors and infrastructure, as the two countries upgraded their relationship to a comprehensive strategic partnership. Morocco says it expects the IMF and World Bank annual meetings in Marrakesh next month will go ahead despite a major earthquake that's killed almost 3,000 people. Morocco's strongest quake in 120 years struck late Friday in the high Atlas Mountains, tearing across some of the poorest regions and shaking a city that's among its top tourist destinations. Rescue efforts are ongoing, with the WHO putting their number of people affected at some 300,000. Canada's armed forces say Prime Minister Justin Trudeau may finally be able to leave India on Tuesday afternoon at the earliest. Trudeau and his delegation to the G20 summit have been stranded over the aging government jet that they arrived on broke down. A backup plane and spare parts are on their way to New Delhi.
North Korean leader Kim Jong-un is headed to Russia in his luxury armored train ahead of talks with President Vladimir Putin in Vladivostok. For more, let's bring in East Asia government editor John Herskovitz. John, so interesting because this is Kim's first trip overseas. After 4 years ago, he actually met with Putin. What's on the agenda this time?
Well, the agenda will probably focus on arms talks. While Russia and North Korea have denied that any arms transfers are going on or will go on, it's something the U.S. has made accusations of for several months. And there are a lot of things that North Korea has that Russia wants, mostly munitions for the Soviet-era weaponry that's on the front lines in Ukraine, the howitzers, artillery. They were also looking for anti-tank missiles and also rocket-launched artillery. These are things North Korea has, same caliber as Soviet-era equipment that's being used in Ukraine, and something that Putin needs because he's been burning through these shells rather quickly.
John, are we expected to hear much when it comes to any sort of updates or the substance of this meeting and what each side is getting out of it at the end as deliverables?
I don't think that we're actually going to hear all that much because we're talking about two countries, Russia and North Korea, that have very heavily controlled media. So we'll get some sort of, if this goes to form, I'm guessing we'll get some sort of perfunctory statement that the two have decided to deepen ties. But Kim's delegation was seen with top military officials, his foreign minister. His state media released some photos of his departure. So we can see that the people he's taking with him are involved in weapons and armaments. So this may be a focus of the discussions, but what actually comes out of these two countries in terms of statements will probably be not that explicit or heavy on details.
John, how do we assess North Korea's military capabilities in a country that, of course, suffers from hunger and poverty?
I think you have to look at North Korea's capabilities in terms of what it can, the numbers that it has. It has enormous supplies of artillery shells. It's making missiles at a very high pace. But the technology that it uses is mostly older technology, 20th century technology. And it's producing these things at very large numbers. We're not going to see the cutting edge weapons that are have made it to the battlefield from NATO partners for Ukraine. North Korea just doesn't have the technology, the semiconductor capability to make the weapons that are at the higher end. But they can make, these are lethal weapons, these are devastating weapons. It has missiles that are nuclear capable and quick to deploy. It has enormous numbers, and these are things that could help Russia as it fights in Ukraine.
East Asia Government Editor John Herskovitz there. Take a look at some of the stocks we're watching when trade opens in Korea, Japan and Australia shortly. SoftBank and chipmakers will be in focus there. Of course, we did say that big move up when it comes to Qualcomm, watching Apple's Asia suppliers ahead of the new iPhone release scheduled for later on Tuesday as well. Also, some of these crypto adjacent stocks could see some moves to Bitcoin briefly dipping below that $25,000 level for the first time in 3 months, Sherry.
And Heidi, coming up in the next hour, we'll take you to CLSA's flagship Hong Kong forum that's taking place throughout this week. We speak to their chief economist, and we have an exclusive interview with the Microsoft Asia president. The market opens are next. This is Bloomberg. This is Daybreak Asia. We're counting down to Asia's major market opens after we saw U.S. stocks gaining ground in the New York session. The U.S. dollar retreating, though, after a record run. We're now watching the Japanese yen and the Chinese yuan given their central bank's actions.
Yeah, Sherry, and this is a point, right? That Fed threat from the CPI print is still very much in play. If we get that sort of expectation of a more hawkish Fed potentially going forward, we could yet again see further weakness and potentially intervention, right, from the PBOC and the BOJ and Japan. Let's get over to Belle for the start of trading.
Yeah, Heidi, Sherry, that yen strength we've seen could be short-lived if we do get that hotter than expected inflation print coming through on Wednesday. But the open upon us for Japan, South Korea and Australia. And at the start of the day here, there's a couple of different sectors we're watching in particular. So Topics Banks is certainly one of them. So we'll just wait to see that live pricing on the contract there. But essentially a lot of investors really buying back into Japanese financials on this assumption that we're going to see some sort of change from the BOJ at its meeting next week, whether that means any sort of indication there's going to be an exit away from negative rates, changes to the yield curve control program as well. So we're seeing that still rising for a second straight day, up 0.5%, but adding to yesterday's gains of near 5%. What else we're seeing in the session? It's still that focus. We'll keep a watch on Japanese bonds. We did see futures really dropping yesterday. Again, it was really all around that reaction we saw in markets to the BOJ Governor Ueda's interview with local media. In terms of the direction for stocks today, we are just pointing a little bit high as we get underway. One of the names that we'll be watching is SoftBank there. You can see it unchanged, so it tells us perhaps the bid-ask spread not quite matching as yet. But what we are waiting for is more details on its ARM IPO, because we are hearing from sources that orders are already 10 times oversubscribed. They could actually end up shutting the order books early on Tuesday, which would be another signal of strong demand. So pricing still expected on Wednesday. That company could start trading on the NASDAQ later this week. So that is the start of play for trading in Japan. But let's change now and take a look at what's happening in Korea with markets here just coming online. And what we are watching at the start here is a little bit of geopolitical tensions in focus, because we had reports this morning that Kim Jong-un, his train has departed for Russia. He will be meeting with the Russian leader in Vladivostok. And essentially what they're going to be discussing is perhaps an arms deal which could help Russia with its invasion of Ukraine. So that is certainly a focus there, geopolitical tensions, not just the story between the US and China. What else we're watching in the session today? It's still going to be that eye on currencies. We're seeing the Korean won just strengthening somewhat against the greenback here. And it is that story again of what we saw really led by the Chinese yuan in the prior session, which helped broader emerging market currencies. So the yuan there up the most in 6 months against the dollar. A couple of different factors. You did mention that we had a bit of jawboning from officials coming through saying they wouldn't tolerate further one-sided moves. There was also stronger or better than expected credit data coming in, and that helped as well. So let's change on, because in Australia today, we're watching those mining stocks quite closely, the energy sector in general, given that we did have that better than expected credit data coming through from China, perhaps that stabilisation we're starting to see in the property market as well. These are all supportive factors. Oil, of course, still a watch for us. We are seeing Brent crude holding above the $90 level. Technical suggesting perhaps there's just a bit of a room for a pause, but Heidi, we're still around that year-to-date high. And we're seeing gains this month, or just in the last couple of weeks, of about 10%.
For more, let's bring in our executive editor for Asia Markets, Paul Dobson, joins us now. So, Paul, a lot hinges on US data, right? How big of a reaction could we see, given that we have seen markets really trading very actively on the CPI print days and other key data days?
Yeah, so I think Thursday morning could be an interesting one for us, watching that reaction coming through from the US markets into Asia. And if we do see a stronger than expected CPI number and that really jolts Treasury yields, then that could have that knock-on impact back into the dollar narrative and then on into the yen and the Chinese yuan for the same sorts of reasons. Both have been under pressure recently. The yen in particular, you know, we had the comments from Ueda at the weekend, which had the impact of driving the yen stronger, perhaps intentionally, perhaps to take it away from getting too close to that 150 round number level, which seems like a psychologically important kind of barrier for the market. So if we have much higher Treasury yields widening again that spread with the Japanese interest rates, then that could put the yen back under some pressure and cause some discomfort among policymakers. That, you know, if there was a sharp or a strong move lower towards that sort of zone, then maybe the BOJ would feel compelled, or sorry, the MOF would feel compelled to do something more to protect the exchange rate, or we might see it on the BOJ and the policy front for that matter. Same thing for the yuan, but also same thing for bond yields overall. We're at some pretty key levels for US Treasuries and therefore for the global bond market too. So could be quite a lot of fireworks if that CPI number does turn out to be on the strong side.
What do we see for chip makers? Is there a potential for another leg higher? I mean, there's a lot of sort of questioning over where the AI adjacent rally goes from here.
Yeah, I think, the last 24 hours of trading seem almost to be a little bit like future bets are back on across a lot of the market. We had this Morgan Stanley recommendation on Tesla valuing the Dojo supercomputer and massive amounts and benefits to the company. We've had the ARM IPO looking like it's going to be taken down well by the market. So that gives some sense of promise as well. We'll have, other things coming through in the next 24 hours. The Apple product launch as well, going to be very keenly watched too. But on the flip side of that, we had some slightly dimmer news for Asia tech overall with the Qualcomm. I beg your pardon, with the Oracle earnings outlook not looking so bright, so that's weighing a little bit on software companies. But I think the AI buzz hasn't completely gone away from markets yet, has had a little bit of a breather, maybe a little bit of a reset. Still that kind of future trend and theme is very much alive though going into this final quarter of the year.
Paul, a guest earlier in our shows was telling us how Japanese banks were some of its top calls. Are we going to continue to see this uptrend given the expectations of what the BOJ will do?
If the BOJ delivers, then absolutely. And even if it doesn't, the speculation is only going to mount. We've spoken to some of the best performing fund managers on the street, and some of them are extremely bullish on the Japanese banks, seeing the prospects for them to even double in value or go further than that. And I think that, the possibility of the banks being able to make more money from traditional banking businesses, lending out to consumers, charging interest rates and getting repaid in an economy that can grow and that can have a little bit more of an inflationary environment, that can see prices starting to rise, could be a really bright spot in global finance and kind of propel the valuations of those banks again, just from a domestically focused audience. And I think that's part of the reason people are super bullish on Japanese equities overall. They've been drawing in a lot of foreign cash, but it's not the only thing. It is also this adjustment to the inflationary environment, the rediscovery of pricing power, and also moves on the governance side to pay more attention to the cash that's been stored up, to make spending plans more transparent, and to be thinking about future investments and putting money to work as well. So there are a number of reasons that the street seems excited about Japanese equities, not just the banks, but including and particularly those banks.
Executive Editor for Asia Markets, Paul Dobson there. We now take you live to CLSA's flagship Hong Kong forum happening throughout this week. CLSA's chief economist sees China in a cyclical recession parallel to what happened in Japan decades ago. Eric Fishwick joins us now. Eric, thank you so much for your time today. So what are some of the lessons that we could take from Japan?
I think the first lesson is that you can't just prop up demand. You have to wait for households and companies in China to rebuild their balance sheets. We saw very rapid credit growth for the decade before the pandemic. That's left the economy highly geared, and we need to see some savings accrued, some balance sheets improved, because until you get to that point, stimulus measures are going to really not get any traction.
We saw China's credit demand sort of improving, deflationary pressures also easing. Does that mean that this could prove to be temporary?
I think the inflation numbers are interesting. Of course, the negative print a month ago was largely food prices, and it was food prices that took the inflation rate back positive. So I would be a little bit wary about interpreting that figure positively. The credit data is more mixed. We were expecting an increase in government bond issuance because of the instruction to local authorities to use quota up by the end of September. And that has come through, and that's very definitely a positive. The bank lending figures, though, yes, the overall lending numbers were great, but the long-term loans to either households or corporates were quite small. So that still fits with my framework that both companies and households are more interested in improving their balance sheets than taking on new credit.
Yeah, the Japanification risk is really interesting to me, Eric, because you talk about obviously this need to wait for balance sheets in households to be rebuilt. Is it possible to do that when property, so closely tied to household wealth, is in this prolonged structural slump? Is there any kind of policy response that could accelerate that?
I think that you've hit the nail right on the head. We want to keep the preferred store of wealth that was the preferred investment asset for most of the 10 years up until 2020 affordable. So how do you do that without creating a negative wealth effect? I think you can do it, but probably allowing a small price adjustment, which is what we're doing at the moment in order to keep developers profitable, is working against that rather than for it. So I think we probably need to see real estate cheaper, because what we absolutely need to see is households have confidence that it will start to go up in price again.
The other similarities, we talked a little bit about excess savings levels that are just sitting idle, but also the demographics, right? The aging population, the issues that they had even with abandoning largely the one-child policy. Does this mean we're settling in for, a structural slowdown that is going to be structurally lower growth for longer in China? This is going to be the new normal. Can they do that without a prolonged period of stagnation?
Look, I think there's two questions. There's where are we on a credit cycle or a business cycle that we've talked about, and there's what the sustainable rate of growth is. I think Beijing accepts that the sustainable rate of growth is getting slower because it's happened to every other country as its population ages and it gets richer. And I think it's reflected in how Beijing has set growth targets. So 15 years ago, a growth target would be 8%. Today, the growth target is 5%. So I don't necessarily associate that long-term slowdown with either stagnation or economic weakness. It's just a reality of the fact that there are now fewer consumers joining the labour force every year, and those workers that you do have tend to be more elderly, which means that they save more. That's inevitable. It's not an economic problem either for Beijing or for financial markets unless there's an attempt to achieve a growth rate that is simply now unachievable.
So what does that new reality mean for other Asian economies that are much more trade dependent on what happens in China?
Well, for the next year or two, I think it's the cyclical process that matters most. Pretty much all Asian exporters for the last 12 months have seen China one of the weakest markets rather than one of the strongest. And I'm afraid I think that continues probably through to the end of 2024. And what practically that means is that the rest of Asia, Asian manufacturing, is waiting for a recovery in demand from US and Europe. So China at the moment is not able to act in the way in which it typically has acted in the last 2 decades, which is the strongest source of intra-Asian trade growth. And that persists, I think, until China's recovery starts, which in my view will be the end of 2024 or more likely 2025.
We understand that India's growth, as exuberant as it is, can't make up for any kind of deficit left by China. But can it go some way towards making up that demand side?
Look, I mean, amongst Asian emerging economies, India is in a unique place. Firstly, it's young, and that means that it has a high trend growth rate. We, in fact, don't have a particularly aggressive Indian forecast, but we're still looking at growth of 6%. So it's higher than pretty much any other Asian country we forecast. And that's because its demographics are very, very favourable. And of course, it does have scale. You're right to say it doesn't yet have scale to match China or one-for-one compensate for weak Chinese growth. But it's the largest, youngest population emerging economy in Asia. And I think it is going to play an increasing role in intra-Asian trade. But it's maybe a 10-year story rather than a 1 or 2 year story.
Eric, really great to have you with us. We appreciate your time. For us today, Eric Fishwick, Chief Economist at CLSA. We have more conversations coming up from the CLSA Investors Forum. In a few minutes' time, we'll be speaking exclusively with the Microsoft Asia President, Ahmed Mazari, and asking how they're positioning best to take advantage of the AI wave. This is Bloomberg.
You're watching Daybreak Asia. I'm Annabelle Drulers in Singapore, where the check on the moves this morning. We're about 15 minutes into the session for Tokyo, Seoul and Sydney. But just taking a look at some of the sectors that are moving here in particular. So Japanese banks are the big watch for us. We actually saw the Topix Banks Index yesterday up nearly 5%. Today, it seems like investors perhaps taking a bit of a pause, assessing the outlook here. But it was that reaction we had to Kazuo Ueda, the BOJ governor's interview with local media, indicating perhaps that by the end of the year, he would have enough
you.